I just exploded.
Ryan, why don't you pull up Amazon's margins real quick?
Well, yeah, I'd have more of a grin on my face than Stephen Hawking on Epstein's Island.
I'm off as a smug cock when you said that.
Wow, fiscal philosophy, you're not very smart at all. You screw up, cash flow kings. Dissector, you are an idiot.
Hello, everybody. It's Saturday. It's 8 p.m. Eastern right now. And right now, it sounds like I have an STD. Or I could have 10 years of working in the fast food business or serving hot dogs to Little League footballers. But Welcome back, everybody. It is Saturday. It is 8 p.m. Eastern. And on Saturday at 8 p.m. Eastern, what possibly could you be doing right now?
You could be out there slinging hot dogs at your 20K a day business.
20K a minute, I've heard. 20K every 10 minutes.
And that's just one of 80 locations, so I've heard. You could also be out there smoking the cigarettes, vaping, doing all kinds of dastardly things. I bought a wine fridge. You could be sipping a bottle of wine, but why would you want to do that when you could be here?
That's
talking
true.
About
and
something that sells something that you could be doing.
That's like the only, reasonable thing I think you could possibly be doing tonight is, of a naughty habit. You can't be clubbing. You can't be sniffing the devil's snow. You got to be going in the devil's lettuce. And if you're going to do that, you have to get it from high tide. So there's a ripple effect. You got to get some of the bogs from there too.
Full circle.
I don't know what you guys are into. Yeah, full circle. Welcome back, everybody. You know what? Never take a day for granted where you don't wake up with a sore throat. That's all I have to say. But while it sucks right now that I have a sore throat, you need to put things in perspective. I could be selling hot dogs as a senior citizen.
You could also be drinking and getting blacked out with Meet Kevin. I heard.
Even better, you could be posting pictures of yourself with champagne from 25 years ago.
Wow.
And using it as a flex. That's all I have to say. But welcome in, though. I've learned after some of our last high tide theme shows that some of the high tide investors really get pissed off, like when we don't talk about high tide, like any minute without a high tide's like an extra dislike to the video. So we better just get right to it. Before that, though, once again, become a channel member today. Only $2 a month. That's half the price of Tactical Shoe Shiners channel memberships, and we actually give you value, and we're not here to scam you. And we actually have overhead costs too. He has no overhead costs. He has no production. He goes in the backyard, the wind chimes in his, on his deck, and he likes to make a video rambling for 10 minutes. We come here every Saturday, 8 p.m. Eastern, ill or not, not a lot of other people would do that. I remember when Fiscal was sick, he was cutting chromosomes to make the show. So it was not good.
True. Yeah, very true.
Bacon, who do we got in the chat here? We Tire on Dividends, polarizing figure. I think him and Gil should have they should have a fan of the year, a polarizing commenter of the year award. And A Money Marshall's in here, Bacon, Aria, who convinced me to get Chipotle yesterday. But I think we just get to the High Tide Roundtable Part 2. Who should we introduce first, Fiscal? I think we should do Blake. It's Blake, of course. Blake comes with the sunglasses, unlike somebody here. Welcome on, Blake, though. It's a pleasure to have you on once again. Second time in the last 3 weeks.
How are you guys doing tonight?
To be fair, we did find out that Raj is into sunglasses, so it's only appropriate.
I noticed that Twitter interaction. I thought it was pretty golden.
Yeah, I know. It's, I hate to say it. I said it on I think I said it on last week's show, but a lot of the high tide investors don't like us for some reason. They like Blake, but they don't like us. So we'll try and cut our losses short tonight. The sunglasses.
A lot of the ones that have been here a while have gotten to know me over the last like 3 or so years. So they've gotten to know me pretty well. Just give it time, you'll grow on them.
You gotta tame them. You gotta tell them we're friendly.
I'll grow on them like some kind of nasty fungus. Don't worry.
And our next guest is none other than Mike Stathis' best friend. I guess you could say he's welcome in Capital Mindset.
How you doing?
Life's good. Can't complain. I heard he was actually at a hot dog stand before he came here too. He was checking out some of the high
doing
school
some
football.
DD. Yeah.
I respect it. Welcome back, though, everybody. The main reason we did the timing of the show actually was because High Tide reported earnings 2 weeks ago. Obviously, episode 50 last week, monumental stuff. Couldn't really negotiate there. That was booked for a while. This is what you get, though. You get 2 weeks after. But since our last High Tide Roundtable was a few months ago, stock price is actually, I don't remember where it was then. I got it.
I think it was in the 220s last time, and it's closer to the $2 even now. So it basically did exactly what we discussed with Blake last time. It gave us a pretty decent earnings release, and then kind of bled off a bit.
Yeah, I don't really have a clear explanation as to why. That's just how it works.
Yeah, for anybody that
tide goes in, tide goes out.
My highest condition guess is there's just a crowd of shorters that are out there shorting every single thing in the industry like the day after their earnings report comes out, the whole industry.
Interesting.
And they just jump from company to company to company shorting them. And sometimes they do really well. and High Tide just gets clumped in with all the rest.
Fiscal, you should know about shorting companies.
Yeah, I know. I know what it's like to hold a stock that's a favorite of short sellers, and yeah, I view it as just opportunities to get more shares at good prices.
Yeah,
that's how I've come to think of it.
Well, it lets you digest the earnings call and the earnings report for like a week or two as the share price slowly, typically grinds down. It actually allows for some patience. You don't feel that urgency.
Yeah. Do you guys have any any little rule that you have whenever a company trades down, like post earnings? Like if, overreaction, do you wait a certain amount of time or whatever?
No. If I like it and I want more and I have kind of the certain allocation desire, I'll buy more.
Ooh.
It's situational. I don't have a hard rule on that.
But I'll tell you, I don't know if you guys know this, but me and Andrew, we run long short portfolios. And we've been on the other side pretty recently of one that went really against us. It probably so a stock that went up 10x in 2 weeks.
And you shorted that?
Yes, we shorted that. Yeah.
Before the 10x?
Before the 10x, yes. So there was one part where it was like a let's fucking go moment, right? Because it went from $4 to 88 cents in a short amount of time. Then it went from 88 cents to about $10 a share. We didn't hold it through then. We covered pretty early on, but that resulted in a dollar figure loss. I'll share with you guys. $160,000 loss. Yeah.
So were you running a
trailing channel memberships with that money?
Were you running a trailing stop?
No. So we were just like kind of watching the developments occur, and a non-material development actually just spurred some life into it. And it was already like on its deathbed. I think at the time it was trading at the lowest. It got to about 10 million market cap. It was a bit of greed because I should have covered. I should have covered. I was up a ton. And I was like, oh, so I lost all the gains and then some a bit after that. So, but you live and you learn. So it took us from like just over 100, almost 10% year to date to now I think I'm at like 86 year to date. So,
well,
I was on the other side.
I mean, it could be worse. You could have shorted Nvidia like a year and a half ago.
Oh yeah. Because with that you do sell a uncovered call and then just get absolutely destroyed. Yeah.
And you redeem yourself by buying Starbucks and SHD though, so it's okay at the end of the day.
Oh yeah, that's the path to redemption.
Yeah,
but
of course,
the only way.
So with HITI though, how much? What's the percent short right now?
I can look it up. Give me a minute.
I don't think it's that high. Like MPW is insane.
No, it's not. It's not ridiculous. I think it's like 9% or something. Last time I looked, but feel free to get the latest from.
I'm just going to go to fintel.io.
Yeah.
So are any four of you familiar, or any of the three of you familiar with using HITI's products, if you know what I mean? Do you have any boots on the ground due diligence?
So I've legitimately never once even tried that type of product.
Good man.
You're the closest of us to Canada, I believe. Ryan.
Yeah, you should.
So you're the
I
one
could get a Niagara Falls actually.
Go check out a store like in person instead of just relying on photos and testimonials from Canadians.
Yeah, you should follow people down the aisles of the store and see what they buy, and then report back to us.
Unfortunately, the stores aren't big enough where I can they don't have a bunch of aisles like that. Like they're not big.
That is true. Yeah, they do have a smaller footprint.
I had some Canadian subs who've been to the stores, and they see a major difference between them and the competitors. So they see it also in terms of how many people are there. They went to one of the other local ones that they know about, and then they went to one of HITI's, and they saw just a tremendous.
We do have a little bit of boots on the ground in the chat here.
Yeah, it feels premium. Yeah, there's a value proposition there. So normally when you talk about a value proposition, you talk about Arizona sweet tea is only 99 cents and it's like a 22-ounce can, big jumbo can, real cheap. That's a value proposition. So HITI is sort of like a value proposition squared, because they're selling value proposition products, and then when you step into the store, it feels like a premium experience. It feels high end. It's well lit, it's colorful, it's glass, it's clean. There's a huge selection. I hear the staff is very competent, and stuff like that. So there's another value proposition there. The experience is a value proposition, and the products they sell is a value proposition.
David said he was a can. I gotta go. I think there is one in Niagara Falls, and our slave editor comes in and says, "No, Dan, I'm not gonna share where I am because Dan fucking doxed me the other day. He just dropped it out of nowhere. He's like, oh Ryan, you're from," and I'm not gonna say it obviously because we have.
I can just go from your accent.
Here, let me just drop your exact street address now, Ryan.
Oh yeah, Fiscal has it. And if Strongman does our taxes, he will too. So I better play my cards carefully here. No, I could make a 30-minute drive if I go fast. If I go fast, I could go up to there tonight if I wanted to. I'm not risking that at the border though, because if they catch you at the border with the ZA, it's not good because it's different ages, I believe, in US. And
just buy a simple piece of glassware and mail it to a buddy or something, and just don't use it before you put it in the mail.
I would never use it. I'm a clean person.
I'm just saying, for anybody in general, not you specifically.
There we go.
Yeah, you don't want any of the residue on there because that's just as bad.
Yeah, wouldn't be maybe that would be good for merch. I can get a mugshot photo. My eyes are red, dude.
So what did you guys think about the most recent earnings report?
I was going to ask. So I was looking at some of the KPIs that I'm paying attention to the most, which is the elite member growth, and what we're at 57 million.
Yeah,
like that. 57?
Yeah, there was something like that. Yeah, the growth was, and I think previous earnings it was at 43 or 44,000. Yeah,
some pretty insane growth because that's the part of the business that's really exciting because that's going to go straight to the bottom line. It breeds loyal customers. I mean, your most loyal customers are obviously going to subscribe to the elite, but as many of those regular buyers as you can possibly get onto the elite membership, that is one of the KPIs I'm pretty much paying attention to on a quarterly basis when I'm checking up on HITI and saying, okay, how is this progressing? The revenue figure was, it's not growing 50% per year, but in light of what we're seeing in the whole space, they're still taking market share. So kind of putting that in the context, those are some of the positives. And then really also looking at the cash flow that they're able to generate. That's also, really important. We already know about the unit economics per store. That's really attractive. We know the, revenue per store versus their peers. We saw that, I think they mentioned in the call, the revenue per store for their competitors actually went down. I believe off memory, it's like 20 something percent.
Mm-hmm.
And they grew. Yes.
Yeah.
So
now it was a small amount of growth, but compared to all the other competitors out there, the fact that there was growth when everybody else had a contraction means they're that much further ahead, basically, I guess you could say.
Yeah. And I don't know if I don't want to take too much of the mic here, but is there another KPI you guys were paying attention to?
So they they met or exceeded all of my expectations, except for free cash flow. Because when I was for example, a couple weeks ago when I was talking to Fiscal and Ryan, I told them that I was expecting free cash flow to fall between 5 and 10 million. I wasn't considering the fact that they opened 11 stores. I'm over here. I rarely pay attention to store count openings. I just know they're opening stores. The pace is attractive. I pay attention at the end of the quarter when we get the update. They opened X number of stores this quarter. They opened 11. And so a significant chunk of what would have been free cash flow went directly into stocking inventory and signing lease agreements and all that stuff. So their posted free cash flow this particular quarter was below my expectations, but that's only because they opened an above average number of stores, above my expectations. So, you can't really accurately gauge these store openings because it takes them months to set all this up. They have to make an agreement with the landlord. They have to get a permit with the province. They probably have to get a permit with the local municipality. And so there's time before you can even get to the phase where it's time to hire remodelers and come in and redo the interior and then hire, staff and get inventory in there and stuff like that. So I would imagine it takes them, 6, 9, maybe 12 months or something from when they first decide to open a store until it's actually open. And that's going to vary a lot from store to store. So I know all 11 of these stores were planned many months before this quarter just because of the nature of how long it takes. But I was not expecting quite this many to land in this quarter, and it heavily affected free cash flow.
Mm-hmm. Yeah. But I do. If you go back to the prior quarter's conference call, it is what Raj kind of suggested that was what we were going to see, because they said that their plan was to reaccelerate store openings while maintaining positive free cash flow. So so that kind of suggested that the free cash flow wouldn't be as frothy, but they would try to keep it at least in the positives while opening as many new stores as they could.
I feel bad for all the people that were listening to our show 2 weeks ago and we were talking about the special dividend and all the buybacks. You won't be getting your high tide 50% distribution, unfortunately. Sorry if we let any of you on.
Well, so part of that's because they're taking some of their free cash flow and paying down debt and building up their cash balance, stuff like that. But 172 is what they started the quarter with. They opened 11 stores. I just did the math. That's 6.4% rise in store count. I don't expect them to maintain 6.4% rise in store count every single quarter, but if they were to do that, that would be incredibly attractive. If they could do that while maintaining, positive cash flow, even unattractive cash flow, because it's all going into store openings, that would be a really attractive situation, because then the revenue would just take off. There'd be some lag time because it takes some time to establish that local customer base. But once they have it established, that's revenue right there. Every store they open.
Yeah, in these early stages, you don't want to worry about capital return yet. Your reinvestment runway is pretty substantial. It's long, and you probably are getting much larger rates of return on that capital than if they were just given back to you. That's what you got to think about is if you got the capital, what opportunities do you have? And if you're getting a rate of return in excess of even let's say 15%, to be a little aggressive, and your investment in back into the business exceeds that, then you should want the business to keep all that cash.
When you really want a fat dividend is when a company is out of good ideas. When finding new revenue is difficult for them, maybe depending on their industry or their business model, whatever, that's when they just should up the dividend or do a lot of buybacks or something. Yeah. When they're out of easy to capture revenue, they should change their thinking. But HITI is nowhere near there. They're still a growth company right now. They're trying to capture market share. They're trying to saturate their local market. They're prepping for expansion into either Germany and or the US whenever the doors open. They want to get that foot in that door as soon as it opens.
Yep. Yeah, I hope Raj isn't listening right now. He's like, "What the fuck is this kid talking about? An 80% distribution? Not gonna happen." I know all the heavy HITI people are so pissed off of just hearing that thought right now. I'm sorry.
You might have some personal assistant watch this and take notes and just give him some bullet points.
Yeah.
So what's the context? You guys did like an April Fool's, like a late April Fool's on HITI investors?
And what do you mean?
You said an 80% dividend?
Oh yeah, no. Wait, yeah, we were talking 2 weeks ago with Blake. I'm like, wait till they get that yield max, that yield max yield, and you get HITI Y. And a bunch of people.
But no, the thing that precipitated that conversation about a dividend, I think, was if they were to continue to grow at the rate they've been growing, at some point the stock price would have to follow the fundamentals, or we're going to end up with a stock that's trading at like 2 times free cash flow. And then at that point, something would have to give, right?
Well, and then also if Germany and or the US don't open up, and then other countries like the Czech Republic, and I also hear rumblings about France and stuff like that. But if these doors don't open up and HITI is like trapped in Canada, basically, eventually they're going to hit a point where they have reached saturation, and it really doesn't make a whole lot of sense to open up a lot of stores, just a couple of select ones here and there where you can serve new customers. But eventually they won't want to open more stores in Canada. And then what are they going to do with their free cash flow? And I was suggesting I would prefer a buyback over a dividend, because once investors get handed a dividend, they become spoiled about it, and they tend to expect the dividend to keep coming. And then they get all whiny and complainy if you slash the dividend. Mm-hmm. So, but buybacks are different. Like you can do variable buybacks, a different amount every quarter or whatever. And investors are just happy they're happening like at all. Especially if they get halted and that gets swapped into new store growth, you better believe we're all going to be happy. But if you slash a dividend for new store growth, many dividend investors are not going to be happy about that.
That's true. They like to piss and moan a lot.
I kind of like the idea of them pissing and moaning, selling their shares, a company switching to a buyback strategy, and then buying up all the shares that they. Yes. Yeah. Could you imagine?
Yeah, I know. Especially when they were at like 4.5 times free cash flow. Like, no, they could have bought back almost a quarter of.
Yes.
Yeah. That would have been ridiculous.
Yeah, sad.
But if you're getting
Ryan,
excited,
I
look
sent
at
you a few links, and I figured we can go through them and talk about them one at a time here.
Yes, just tell me what to put up, and I got it.
Just go ahead and start with the top one. I think it was news about the new website. So if you'd asked me at all in the last year or something, like what could this company be doing better, like that sort of question, I would have instantly told you, well, the one part about this company that I wish they were doing better was their website. So this company has 6 or 7 websites or something. I regularly talk about the 3 that are in the top 5 as far as revenue and foot traffic and stuff like that globally. But they have some other ancillary websites. This one in particular is meant to service their brick and mortar stores. So you can take a look at your local inventory of your local stores. You can place a pickup order. You can place a delivery order, stuff like that. You can price compare, right? You can go to the HITI website and take a look at the prices in your store while you're standing in a Value Buds or in some other competitor's retail outlet. You can be there and be like, well, I could buy this for $20, or I can buy effectively the same thing for 15, just like a couple blocks away. And so the whole point of this website was to facilitate additional foot traffic facilitate additional revenue, stuff like that. But it was clunky, and they had a big problem with, I believe, and I would love it if somebody got down in the comments and corrected me, because this has been like 3 years ago when this story started. I believe the entire reason that there was a problem is that the original guy that they hired to build them a website owned like the rights to the structure of some aspects of the website. And then when his contract was up, he refused to like update or service those aspects of the website. So they were unable to update and fix bugs. And so it became a very buggy thing. And there was a long time where the worst aspect of this company was their buggy website that like wouldn't do things correctly the way it was supposed to. So this is 2.0. They redid the website. They hired a new development team. They got a working version of the website, what the first website was always supposed to be. So they own, I don't know, 6, 7, 8 websites. I'm sure someone who can do their due diligence can count them all up and tell us. But this is the one that was supposed to service their brick and mortar stores. And it is new and shiny. And it's not entirely bug-free because, you know, just like every new video game when it comes out, you're going to find bugs when it's brand new. But the point is this website is serviceable. They can fix the bugs, right? So they actually have the ability to improve this thing, to update the user interface, all that stuff. So I, as a long-term shareholder, am very happy that this particular fix happened. This is comparable to, you know, that part on your car. Like maybe you have a squeaky suspension, or you have like a belt that moans when it's cold in the winter or something. You got to go tighten it. This is that thing on your car that you have been ignoring, and then you finally got it fixed. And it was always sort of a hassle. It was never like a major deal or a safety issue. But I'm really happy that the belts don't squeak and the suspension doesn't moan and all that stuff.
Peter Stocks is cringing in the chat right now. He's got a car.
Well, this was one of the bear cases. Was, gosh, this website sucks. You know, it's buggy. This company doesn't actually, you know, care about.
Imagine the whole bear case rests on the fact that the website's a little buggy.
A little buggy, right. So that's just, this is just more good news for the company. Is during the quarter, during the last few months, recent news, they finally got the website, like a new version of it, polished up. This is the 2.0 version.
Nice. Actually,
website.
Speaking of beater stocks, he actually had a question. If we can scroll up and find it,
it's interesting that. Yes, this question.
Blake, he asks you. I'd assume it's some forum because I don't.
It's Yahoo message board is what that stands for.
Okay, Yahoo message board. Yeah.
Okay.
Yeah, I mean, there's shorts. It's the cannabis industry. There's shorts for every company. There are people that love to short Tilray. There are people that love to short Green Thumb. There are people, you know, like, and I don't really know how large the shorting community is, but boy, do they show up on the StockTwits board. And if you want a really strong indicator for a good day to buy on, it's the first day that they aren't on the board. So they'll be on the board like 5-6 days in a row, screaming about what a horrible company it is, spreading FUD, and then on the 7th day, they're just not there anymore.
They had to rest on the
day to buy on because the selling pressure left, right? Because they're no longer needing to spread their FUD to push their position, all that. And as soon as you see that leave, that those bears, they're no longer shouting about what a poopy company it is or whatever. That's a good day to buy. I've noticed that over the years with small companies like this. It doesn't take very many shorts to push the shares around.
And just a comment on the shorts, at least like especially the ones that my co-host Andrew, he's found plenty of them. They all have a commonality. Even the one we got our, if you want to say ass handed to us, that one is still going to die, which is the funniest part. So it's still a company that's on death's row. But they all have a commonality. The one that we shorted to literal zero, which is Cons. Cons is no longer with us. That one, and for some context, the capital generated on that was still greater than the one that we lost here, which is like the lucky part. But both companies and then the other ones that we participated in have a commonality of first of all, cash flow, forget it. And it's not because they're reinvesting in the business. It's fundamentally flawed business. There's something that's broken in the business model. That's not really present here. It's an early stage company that has no free cash flow or cash flow from like owners. Yeah, I think it's called owner's cash flow, where it's just the excess cash flow that's available to provide to the shareholders in the form of buybacks or dividends. That does not exist, or distributable earnings, as they call it in private equity. But the other part that you have is like massive insider sells. That's another thing that you often can see, some sort of like panic to the exit of sorts.
Nancy.
Where the founder, Nancy.
My bad. Nancy. Yeah, Nancy Pelosi.
Oh,
With Visa. Yeah.
Inside. Oh, with Visa. Okay.
Oh,
okay.
stop it. That is.
But you don't have that with Raj, correct? You don't have Raj going like, oh, liquidate. Oh, sell a big stake here, sell a big stake here. But they try to.
After watching me on this show, he might. You never know.
Yeah, he's never sold a share.
Yeah.
He has bought more shares, but he's never sold a share. In the 15 years because he started with it private and then he took it public in 2018, 2019, right in there. And since then, since it's been public, he's never sold any shares.
Yeah. Yeah. So there's that's something that you typically see. And in this case, like if you back out the growth capex, the investments they're making, they are free cash flow positive. Again, so that's like one of the biggest commonalities that you often see. And usually also they're funky business models. This is not really a funky business model. They're not, creating a new method that's like some weird way. So they're not like
WeWork.
Yes, exactly. They're not creating this new. Well, WeWork actually, that business model does exist via Regis, but it was done just in an abysmal way. But there's another, the WeWork of hotels. That business model. There's a bunch of companies like that, right? That they don't own anything,
so
and then they just.
Yeah, I really like that High Tide's business model is very tangible. Like I can see store openings, I can see lines of customers out the door waiting for their turn to get in there. It's extremely tangible. It's very easy, even though I can't go to Canada. I mean, I could, but I haven't. Even though I haven't gone to Canada, I can see the growth of the company.
Yep.
Boy, do I have a company for you.
Like retail, the retail business model is a tale as old as time. I mean, like there's a bunch of specialty ones out there that have done really, really, really well. Dan's in the chat, Tractor Supply. I'm not comparing the two yet. They're not. It's not there yet. He's going to be a blasphemy.
I really like Tractor Supply. We used to own quail. Like my wife had pet quail, and so we would go in there for animal stuff. Because they support if you have birds. Not just chickens, but any birds. Like if parrots or anything like that. And they're a good company. They provide quality services that other people don't. They fill their niche well. They have dominated their little corner of the retail sector, Tractor Supply Company. And I really do view High Tide as having the potential over the long run to do that for, all of the US as soon as those doors open. Same with Germany. And anywhere the door opens, this business model is so competitive. All Raj has to do is pick some good store locations and plant stores there and just wait.
Yep. And just in any retail business, any retail business does benefit from scale. So the bigger you are, the better you can buy in bulk, better pricing, etc. So I understand why if you're putting yourself in his shoes, he needs to get as big as he possibly can get safely, because you can definitely overdo it. And get too big too fast and then collapse in on yourself. Expansion is hard. I mean, even when you're already a big company and you're, let's say, expanding into a new country, that can be very hard. So, for example, you can look at Target. Great case study. Tried to move into Canada. Target's a big company, right? Ryan, Target's a big company. They tried. They got repelled by the Northerners. Almost like
Canada's a bunch of sissies. We don't want them. We don't want those. That's a blessing in disguise. I'm sorry, Blake. I think I know you live in. No, you're not in Canada, Blake. You aren't.
No, I'm not in
I
Canada.
think you are. So I'm not disrespecting anybody here. We don't want Canada. Okay, that was intentional. We don't want them. We don't want
intentional loss.
Yeah, intentional loss. All the Canadian stocks suck. So I say that in all respect. They have their banks. I was watching the Strongman show with you earlier today. They have their banks and energy, so we don't want that.
They have some banks that pay a pretty fat yield. Like if I was a Canadian and I didn't have access to the U.S. markets as readily, I would probably be interested in their banks because some of their banks have performed pretty well.
From what we had a guy that was Canadian come on, it's mainly with timing with banks. You got to get in at a good price, but if you do, it's high reward.
Well, banks are cyclical. Yeah.
Well, and they're also an industry that's supported by government. Not every industry is as heavily subsidized or guarded by their local governments as banks are.
Yeah. And I'd have to say, though, like within the space that they operate, it also benefits to be specialized. So some retailers have outcompeted or secured a spot within retail, even though there's nothing really differentiating them from one or the other. So let's take an example, not to pick on them again, but Target, right? So you buy at Target knowing that Walmart is cheaper. So you know Walmart is cheaper, and it's not by much, but it is cheaper. And so what is Target doing? How have they secured their spot? Because they're clearly going to stay with us in the United States. They've targeted that customer who just wants a nicer experience. And that's what
they don't want to feel like they're about to get molested every time they go to the frozen food aisle at Walmart.
Put it that way. Yeah. Yeah. They don't want to. There are Walmarts that are nice, but yeah, I hear that a lot about Walmarts. And that's something that they've done to secure their spot, though, because you think about it and you're like, I know come on, be honest with me. You can get everything you can at Target. You can get it at Walmart, right?
100%.
Amazon.
Yeah. You can't. Well, then why go? So they had to have done something to differentiate themselves. And so that's also something that High Tide has done on top of the scale benefit. So they're kind of playing both attack verticals at the same time, which is really interesting. Some of their competitors have to figure that out, though. So if they're smaller, in order to compete against High Tide, you have to offer something different, a reason for you to choose. Because if I know I can get the exact same thing at a High Tide store versus your store, why would I go? And if it's the price is cheaper, knowingly cheaper, is it location convenience? Because if you go to in some states you live by like a Publix is knowingly more expensive than a Target. There are going to be more Publixes than Targets in your area. So you kind of have to go out of your way for Target, and Target's cheaper. And then even then Walmart's cheaper. So maybe Publix is beating you on the the convenience factor, as an example. So
yeah. I'll tell you what, the saturation with like all the weed companies is insane now. And I know High Tide isn't even in the US, but like we have an area of town. I don't want to call it trashy, but you're starting to getting away from the nice parts. You're going from QQQ to QQQY, not good. So essentially it's just like a strip of so many cannabis companies now that are just moving in. And I think if High Tide's, obviously I'm not a customer there, I haven't done due diligence yet, but if the way that people are talking about these stores is true, I think it's going to be highly successful for them in the long term. There's just so many trashy weed stores now. It's sad to see.
Just from the images I saw, it appears like a very, very, very clean store. I do have to fly up there at some point and just like visit it. But just from what the subscribers have sent me as far as images go, what is available online, but better the ones that are taken right then and there in person, because obviously on the online ones, they make them look nice and stuff. So they look really kept together. And then the other stores, it kind of just seems, kind of that, not to mean it in a bad way, but it's going to come off as I'm saying it in a bad way, but unprofessional. Mom and pop unprofessional.
I'll get a picture of the local one. Yeah, you can come to New York. You can pick up me and Dan. You can smuggle me in the back seat.
You're just doxing everyone now. You're just like saying, I live here.
New York is very. Dan makes it public.
He lives in New York City, so
yeah. I'm near the Appalachian Mountains. That part of New York. I'm not the part in New York where you see Confederate flags. So
I visited Dan in Manhattan the other week. So
yeah, you guys went to Central Park, took a walk.
No, he took me to the Brookfield Center, but nice try.
Oh
yeah.
I gotta find these some weed stores near me.
Dan was just walking around. He's like, "This is my office building. You see this? I own the shares of the REIT that owns this."
See that? Oh yeah, Trump Tower over there. Yep, I walk by that every day. Fifth Avenue. Yep, I live there. I used to live on Fifth Avenue. Look it up. That's an amazing quote for those who know.
Oh,
for those who know, they know.
Yeah.
No, there's so many trashy. I'm trying to find this without doxing myself, but Blake, I'll pull up the next link that you sent me. It was.
I would say pull up the third one, because the second one was just the earnings report. You already know what's in there. You just find it yourself on Google.
Am I over 18? Yes, I am.
This is the investor presentation. It's about 30 pages long. The first 15 or 16 pages are full of a bunch of really solid information that investors should be paying attention to, like, customer growth and stuff like that. So I figured we would skim through it, and there's a couple of charts in here that I was going to produce on my own, and then I'm all like, you know what? It's a whole lot easier just to have Ryan open up the investor presentation and turn to like page 6 or whatever it is.
Page 6.
I would go through it just one page at a time real quick, and then the first one is the first chart that I really wanted to do was Cabana Club membership. And so this is the non-paid membership, and then we'll also look at the chart for the elite growth. And I'm just shocked at the pace of the elite growth.
It's my most important KPI.
The elite growth, yeah. Well, you're a Costco member, so they're heavily concentrated in Alberta and Ontario. They spent most of this year kind of filling in more stores in Ontario. It's the highest population part of Canada. It really just makes sense for them to have the most stores there in the long run. But right now, I think most of their stores are in the Alberta province. Turn the page. Yeah.
Oh, the good graphics.
The insides of the stores, they're very pretty, very inviting, very clean and professional looking. I tell people all the time they kind of feel like a jewelry store. That's what it looks like to me. I see lots of glass. I see lots of eye candy. Yeah. When you step in, you're just bombarded with a bunch of things that are just screaming, buy me, buy me. It feels like a jewelry store,
I wonder what it smells like in there.
I'll give you one guess. I'd be willing to bet it probably smells like what you would expect.
Okay. Never know. Maybe there's a no using the product inside the store. They wanted to smell.
It would even if you don't combust it, it still has a very particular odor if you have a lot of the fresh product around.
Fun fact. So when you go into a coffee shop, a lot of times they pay these companies that you've never heard of, but they're wonderful companies, by the way, and they pay for the I'll just say devices to simplify it that make the store smell more like coffee, and it's supposed to make you crave more coffee. They do the same thing, but they put like
Cinnabon. Cinnabon would set up specifically in malls, interior, and then they would bake. And then the entire half of the mall that has the Cinnabon would smell like them. And then you'd walk around craving Cinnabon, and then you turn the corner and you'd see it. And that would trigger it. And then you'd go buy Cinnabon. It's all psychological.
Well, thanks. Now I'm hungry and I want Cinnabon. And I don't even have the munchies over here. What are you doing to me?
Here it is. So this is the discount membership. This is the free membership. This is not the one you pay for. All you do is you give them your phone number, and then they give you like a number, like a serial number, and then they track your buying habits, and then they sell the metadata on that buying habits to the entire rest of the industry at a pretty attractive margin. It's like 6% of the revenue, and it's a high margin part of the business. So this is a big part of what gives them an edge, is the fact that they're collecting this metadata, because it gives them an information advantage. Months before everybody else sees changes in consumer habits, High Tide sees what happens in their Canna Cabanas, and they have very detailed information on what people are buying and when and why, and they can derive conclusions on what they should be doing to change, based off of what the consumers are doing. They institute a local pricing model, so they will price check all of the retailers, all of their competition in a market, like in a small town. And then their local Canna Cabana will price aggressively compared to their local competition. And so you will see margins that are different from one store to the next based off of what the neighborhood's like and what the city's like. And if you drive a half an hour to the next town over, maybe the prices are noticeably different because in that town, all of the prices are noticeably different, that sort of thing. So this is how a big part of how they're able to capture customers in basically every local market they put a store into is because they're locally pricing for competitive and attractive prices.
I gotta ask, why is there Tesla in the rewards program advertisement they got there?
They give away a free car every year.
Oh, that's a good tax write-off.
Yeah.
That's a good incentive for people to hand over their phone number and email address and everything, right?
Mm-hmm.
Yeah.
We don't endorse driving while high, by the way.
And here's Elite membership. And this slope, the slope on this is just blowing me out of the water. Like I was not expecting it to be this steep. And what I was really not expecting was for it to get steeper over the last several months. Like, look at that. It is just curving upwards. And I think a big part of this is they're picking up and developing additional brands. And as the number of these offerings become available, like as they hit the shelves, and as word of mouth spreads about what's happening with these elite customers, they're coming in and they're buying stuff that other people can't buy, or they're buying other stuff that other people can buy at a huge discount. That regular customers see this happen. Like the guy in front of you in line gets a better price than you do, and then you have to think to yourself, man, I come in here like once a month. If I was to pay the $35 fee, like let this sink in. Like maybe you'd save a lot more than $35 over the course of just that year. And so as people see the value proposition happening around them, they're going to want to get in on that action. And so many of the normal, regular customers are being converted into elite customers at a rate that I am surprised by. I'm just floored at how steep this slope is.
Yeah. I didn't even know it was this aggressive. I knew they had a membership program. This is don't tell Joseph Carlson about this. I'm surprised he isn't in here right now.
Well, that's
a JC chart,
metric, right? Capital, yeah. The
Sorry?
super sticky, that's your primary metric. This elite growth.
Yes, it's the most important one.
What about the 5-year chart method?
Performing store economics. So their stores have higher revenue than basically everybody else around them.
Mm-hmm.
And I'm sure that a brand new store that just opened in the last month or whatever doesn't have that. But a mature store after it's been open, like say 9 months to a year, and all of the local consumers have had their chance to go shop at a Canna Cabana and try it out and decide whether or not it's for them or not. And that's why the revenue is so high.
Yeah, you need introduction and awareness.
Yeah,
of each new location. Yep.
Yeah, every new location they move into, every small town, every suburb, it takes time for that awareness to hit. Yeah, and then the chart on the right, that's market share, and I think this is my favorite metric. Because I think over the long run, like 20, 30, 40 years from now, I think this company might have like 30 to 40% of the market. Like I think it's possible that they become very dominant up in Canada. And ask yourself this: they will attract most of the discount customers, right? But how many of the convenient customers will they also attract? People that just plain want to go to a close store, right? So the more stores that they open, the more frequently their store will just plain be the closest one, the most convenient with easy parking. It's maybe it's really quick to get off the highway and then get back on. All those factors apply, and so their ability to capture market share, I think it's pretty strong. I think it's very aggressive, and I think that they will very fiercely capture market share anywhere they're allowed to open stores, just because the discount model is so advantageous to the customer.
The next page, I think when we get to it, is really interesting.
Okay. Yeah, let's go.
Oh.
It's just this.
Yeah.
Right here.
The sales per square foot.
Sales per square foot.
Costco.
Yeah. That's a little blurry. What does it say? What number's Costco and what number's Canna Cabana?
Costco's 2,500 per square foot. Cabana is 1.6.
Okay.
It's beaten by Yorkdale Shopping Center.
Yeah, well, they also sell televisions and refrigerators at Costco and stuff. So I would imagine the average value of the average item is probably a little bit higher than at a Canna Cabana.
Look at Lululemon down there, because I think Lululemon, in terms of size, their stores are pretty comparable to the typical Canna Cabana.
I'm a little surprised at how much it beats by Walmart. I was really sort of expecting, not that different from like a Walmart or like a Kmart or a Kroger or something.
To defend Walmart, it's just that now they're so big already, and then on top of that, a lot of their store sales have moved online.
Aha.
So online sales will skew that.
That makes sense.
Yeah, because Costco has an online presence, but like people who shop at Costco, we love Costco, so we want to go to Costco.
Those $1.50 hot dogs are what's killing us.
It's not just the hot dogs. I mean, you get free samples. They're constantly moving things around in the store, so you get to a part of the store that you think is familiar, and then you get there and it's completely different. And you gotta turn around and do a UE and go find what you're looking for all the way on the opposite side of the store and stuff. It's an adventure. Going to Costco is an adventure.
Going to Walmart can also have the argument that
it's like a labyrinth. There's no such thing as like getting in and out quickly, huh?
Ryan, what happened to you at Walmart? I'm starting to think it's like there's something at
Walmart.
Yeah, do you want to talk about it? We can take a pause on this.
Walmart has given him psychological scarring.
I don't think anything. I'm trying to think. I mean, the last time I went to a Walmart,
deep in there,
I was in Chicago. So I don't think anything's happened. It's just you gotta have a natural hatred. Would you rather almost get
treatment? And they just showed him photos of people at Walmart for hours until he broke.
To be fair, that people of Walmart page with all those images, it is a little scarring, to be honest.
Oh, it is.
What?
No, I mean, you gotta pick your poison. You rather go to Target and you lose your dignity, you lose a little self morality and respect for yourself, or you go to Walmart and you risk a few things. And I'm not gonna say that because somebody could get triggered. Yeah, this is like who doesn't feel kind of icky in Walmart?
So it does. I will say it does vary a lot from Walmart to Walmart. Like the one in the sketchy part of town for sure. But if you go to say the Walmart in Scottsdale, Arizona, for example, where mostly affluent people live, it's very nice. It's a lot more similar to a Target, like as far as how you feel when you're inside the place versus what you're thinking of when you think of a Walmart. It's just the ghetto needs Walmarts too, and they're like, crappier Walmarts.
The kind of Walmarts that you see Yieldnex investors at. That's what I'm referring to.
So
Blake, you talked to
Jay. No crappy Canna Cabanas. They all fall above a certain threshold of appeal. As far as I know, if there was a crappy one, I would just reach out to Raj on Twitter and be like, "Yo, get this a new coat of paint."
Yeah, I feel like I get the sense that Raj, if he found out that one of the stores had deteriorated, would probably get it corrected pretty quick.
Oh yeah. He wants things a certain way. This business model where there's lots of glass and you're bombarded by eye candy. Raj has been talking about this since before I started following the company. Like he's been talking about this probably since before he took it public. Like years. He knows the customer, when they step in, they need to be like overwhelmed by buying opportunities that they find attractive if they really want. If they really want a thing, they'll buy it, but they have to be made aware that it's here for you right now. If you buy it here while you're in the store, it's available. And so a big part of that is you have to see it. You have to want to experience it with anything you're going to buy like this. And this is a big part of why I think the jewelry store model works well for this industry. And because people, part of this industry, these consumers, they're after the tactile experience. They're after the smell and the taste and stuff like that. All the ones I talk to, they speak about flavors, just like coffee drinkers and alcohol
wine enthusiasts.
Yeah.
There's the next slide, Ryan, that this is underappreciated, but the next slide actually is quite important too. It may not look like it at the surface, but this one right here, because many of those companies, some people might know, the dividend investor community might know, like RioCan, for example, but the importance that shouldn't be, just dismissed entirely is that that's actually a problem depending on what company you are. If you're just some new rinky-dink, I don't know, store, and you're trying to get a real estate spot. You think it's just anyone? They just no, they actually want to make sure that they're working with someone who probably will last a little bit. So sometimes the best real estate truly is reserved for the one that's the winner. Winners keep winning mantra. So like a RioCan, if they have a really nice spot, that's the perfect spot. Let's just pretend that's the perfect spot for you to be in. And then I want to start a store and compete against Raj here. And I have no reputation whatsoever. RioCan's going to be hard pressed to give it to me. And you put yourself in their shoes. They're going to think, well, this guy's never, ran a successful store before. We don't even know how his standards are. We have a certain standards for how we want our location to look. We have other tenants around here that want the place to look a certain way, and they demand a certain level of quality. So the best real estate spots, and for retail, that's very important. You have to match the standards of your landlords, and so they're highlighting this, and I think many investors will kind of just dismiss that. But that is important. It's for a company of their size. Like if you look at Target, you would take it for granted. First of all, because they own a lot of the real estate, but that's almost like for granted. You're looking at Home Depot stock, that's definitely for granted. Like you're just assuming that Home Depot is getting the best spots. But for High Tide and in their industry, that's not something that you want to kind of just go, oh, whatever. For them, it's not for granted.
On top of that, I don't think that they've ever closed a store. Like, I don't think they've ever, we set this up in a neighborhood. We thought it would do well, and maybe it has underperforming metrics, and we're going to shut it down. Mm-hmm. So that's something they can tell these landlords, hey, you know what? We've never shut down a store. So
infinite rent.
With us, we will become a long-term tenant. Like, that is the expectation. We're not going to sign a 5-year lease and cancel it in 5 years. We're going to keep renewing that lease basically in perpetuity.
Yep.
Forever. That's our intention.
On the conference calls, Raj even he brings up that they're very strategic about picking locations all the time. Like he says that I think every single conference call I've listened to. It's just one of the things that I don't think gets a lot of attention from people.
Yeah. We tell Realty Income starts leasing out to a High Tide.
And that's why when people ask me about future dilution during expansions, I can't really give a straight answer because I think it's dependent on how many opportunities they're going to see. Because so far, if you have a store that's already selling cannabis and it's already profitable and it has produces a certain EBITDA and stuff like that, they will come in and they will hand you shares for that store. But if they don't see that, they'll just set up their own store, across the street, down the block, whatever. And so it has to do with opportunities. If they see lots of opportunities, they will dilute to get those primo stores in good locations. They already come with a customer base. It's a great deal, but they use shares to do it. If they don't see those types of opportunities, they're just going to open stores with debt and cash and cash that they already have, in addition to cash they're generating that quarter and stuff. So I can't give a straight answer on dilution because I can't give a clear picture of opportunities. I don't know how many they're going to find.
Wow, we have some on the boots due diligence here. Dude, I'll dox myself. From retire on dividends, polarizing figure. I'm from Colorado and fucking weed is a lost
it has no future. Hey, Ryan, pull up. When I was on 2 weeks ago, I sent you a link for the Cogger for the industry. Pull that up.
I don't know if he's referring to High Tide or one of the smaller players. That's what I kind of portray it as, but you never know.
This is a small company in a big industry, and the industry's not even that big yet. It's still growing. It still has a lot of growth potential. And 2 weeks ago, when I came on to talk to Ryan, we lost Capital Mindset. When I came on to talk to Ryan on Fiscal,
retire on dividends. He always finds a way to get on top of you. No Diddy.
To get on top.
I'm pulling it up.
Ryan, if you go into the Discord and scroll up to when we were chatting 2 weeks ago.
Yeah, I'm looking. What am I looking for? Oh, cannabis marketing growth size.
Yeah, I think it was the first of 3 links that I sent you, or maybe first of 4 links or something.
I got it. I'll show you guys. I got pictures of that other cannabis store that's near me.
So the first paragraph that's black, it cites the Cogger. the global cannabis market, right? And this company has global intentions. They are leaving Canada as soon as possible. The global cannabis market size was valued, blah, 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 COGR 34%. That's all I care about. Look at that 34%. That's juicy. So, you say cannabis has no future. That is not a comment I can agree with. Cannabis has a future. I don't know what it looks like. I don't know the details of what it's going to be in 10 or 15 years. I have I have concepts of an idea. I believe that beverages will become a bigger thing over the next 15, 20 years. I believe the entire consumption thing is going to become more normalized into something like how our culture treats alcohol now. Cannabis is shifting toward that. That is my thesis on the industry as a whole. And the younger people are consuming more cannabis than they are alcohol.
Oh, they are. Yeah, they are.
Yeah. And there's you don't get hangovers. Like it doesn't destroy your liver. There's advantages and disadvantages to all of these different things. But people are choosing this to consume this over other things. It also has a lot of medicinal applications. Not just recreational and stuff, stress relief and stuff like that. But there's a huge medical market as well here, and so there's going to be this dual driver where you have lobbying from both the medical side and the recreational side to push this through governments to make new legislation in order to open doors. And this 34% is expecting doors to open, right? Obviously, if Canada is the only country on the planet that stays recreational, then the global cannabis market is not going to continue to grow at 34% forever, right? Because it's just trapped in Canada for full rec. And then medical is most of the Western world has medical by now. Not all of the Western world, most of the Western world has some medical available to them.
Yeah, whoever said a cigarette in a Zyn didn't help out, some terminal illness. I'm just saying, for Philip Morris and Altria,
I think what also he was trying to say in the spirit of his comment was probably around the competitive nature of selling cannabis.
Yeah.
And the rebuttal to that is like that doesn't show up in the figures that they're really struggling. And also the second part of the rebuttal should be focused on the emphasis that this isn't Colorado, it's Canada. Colorado market has completely different rules in place as far as how it can be done, and the culture. Maybe you could say it could be different. Who knows? For High Tide, I don't think High Tide necessarily has to care about Colorado. Colorado is a U.S. thing. This is a Canadian thing.
And there's problems in any of the states in the U.S. that have recreational because of there's no access to banking, and there's a lot of other problems in the recreational industry in the form it exists now in the U.S. If regulations change, doors open, the whole game changes. If things change on the federal level.
I actually think that when Colorado opens up for High Tide to expand into it, like the NASDAQ says, okay, green flag, you can do this, you can go, you can stay listed on the NASDAQ and expand into the U.S. as long as you follow state laws. We'll let you stay listed. If they get that green flag and they start expanding, I actually think Colorado is going to be one of the states they try to first because they basically have an unlimited permitting system in Colorado. So Colorado doesn't really care how many stores get open. They know that the free market will shut down the poor performers and the successful ones will eventually capture the market share and thrive and do well. Yep. And High Tide has a business model that is meant to be like, it's meant to win gladiatorial death matches against other retailers, against other discount models, right? Name another discount model that also has the importing of the glassware. Name another retailer that also has data aggregation. Now, I know Value Buds does, right? They're also selling metadata. But Value Buds has problems with Sundial. Value Buds doesn't have the glassware importation component. Value Buds doesn't have this large family of websites that it maintains. They don't also own CPG companies. Like they don't have this full package of synergistic things that are all helping to make the value proposition that the customer gets higher quality. They don't have that. And these Colorado companies, these mom and pop owned retailers, even chains 20, 30 stores. We've seen High Tide already outlast almost all of the 20 to 30 store chains in Canada. The mom and pop stores are suffering. In like when we were looking at the map earlier, in like Alberta, where there's allowed to be a huge number of stores, High Tide has put in a huge number of stores, and the black market there is almost dead because the consumer has a choice. I can go to a convenience store, I can go to a discount store, I can go to the black market, and for whatever reason, all these different factors, they're repeatedly and consistently choosing these discount stores. They're repeatedly choosing the white market, not the black market. And in the provinces in Canada, that this is a big part of why High Tide's starting to open up stuff over on the eastern half of the country, is because they're finally allowed to, because the eastern half of the country, there's a lot of cities that are finally opening up to these retailers, because the retailers are like, hey, look, the amount of black market share in Alberta is like, it's like 15 or 20% or something. I don't remember the actual number. It's very low. And your city has like 70%. And maybe you should let some of these legal retailers into your town so that you don't have quite so many like illegal drug dealers walking around not paying taxes, not contributing to society in a way that you want it. And after years of hearing that argument, many of these municipalities have finally opened up to retailers, and finally they're allowing permits in, and High Tide is taking advantage of that. And I would love to see, and I expect to see, the black market values, the black market, the amount of market share that the black market captures go down as the amount of stores that the white market is allowed to open up increases in every environment, every ecosystem. And that's proof that these discount models, they're going to be able to use that as lobbying pressure against governments. Like, hey, look, everywhere I'm allowed to open up as many stores as I want, the black market dies. And that's going to be a powerful tool that they're going to have when they lobby government officials in any government, in just both the U.S. and Canada. And it doesn't matter if it's on the city level or the state level or the federal level or any of that. They're going to say, hey, look, do you want to be tough on crime? You want to be, win the war on drugs? Why don't you let us tax it? Why don't you kill the black market in your area? Let us open up a bunch of stores, and we'll turn your area into what parts of Canada already look like, where there basically is no black market.
So for anybody that's curious about the due diligence, these are the pictures. I'm doxing myself here, but this is like the local smoke shop. And at night,
I know what tree you live on.
Yep, the whole thing lights up. So like you don't even see the building. It's just like this. It's in the middle, very trashy area of town.
A lot of pawn shops and like car title loan places.
Dude, it's horrible. It's just like there's a Dairy Queen. That's the best thing you got there. So that's the outside of it. The inside of it, oh, it's just terrible. Like this makes High Tide, like you kind of appreciate it a little more. This is the inside of the store. You compare that to like a High Tide. I know you got a big butt in the middle of it. You have a lot of free space, I guess. That's a positive. Very interesting part of town. Always an interesting time when you drive by.
Yeah, I think there's some misunderstanding going on in the chat, because I think you guys Blake is talking about High Tide, and I think We Tire is talking about growers.
oh yeah, this company doesn't grow. Growing it's a bad idea. Basically every other mature commodity on the planet, unless you're selling like medicine, the producers don't make the big bucks. It's whoever is selling it to end use customers, right? So like let's look at like coffee. Who makes the big bucks? The coffee growers or coffee sellers?
Starbies.
Oh yeah.
Right. The coffee sellers. Yeah. So pick another commodity. Pick any commodity and any commodity.
Oh yeah. Well, oil.
Okay. Well, the producers are the sellers. Many of them are vertically integrated. So like I guess that's a bad example, or maybe it's a like a sideways example.
It's a nuanced example.
It's a nuanced example. Yeah. But most commodities, the person that actually extracts it from the ground or grows it is not the person that also sells it to an end use customer. And usually the person that sells it to an end use customer, typically they get the opportunity to produce some sort of value added proposition where they're able to upcharge you because, we're going to add some froth to the top of your coffee, or we're going to squirt some syrup in there or something, and whatever it is with any consumable. And so I see this as similar to that, where as the industry matures, the people that are growing it are not going to be able to make a lot of money because there's going to be a lot of competition for growing. It's not super difficult to grow it unless you're trying to get like really ultra high quality product, right? And then it is very difficult, and then it does require skill and stuff like that. But everything is a learning experience, and people can figure all that stuff out. And so competition will come in and compete with you in whatever niche you find profits in. This is why margins crush. New industries open up. You get a company like Enphase, they have a monopoly on what they do. Eventually, somebody will come in, like the same sort of thing is happening with NVIDIA right now. NVIDIA is so far ahead in the graphics cards technology that it'll be several years before other people catch up. But the fact that NVIDIA is making money hand over fist is producing this grass is greener effect where people see that profit, they become jealous of that profit, and they say, hey, you know what? Let's develop our own thing to compete with NVIDIA, right? Same with anything. And when you're dealing with this competition situation where people can just produce something slightly better or whatever, it's a very rough business to get into. But when you're dealing with a competition thing where it's how well can you develop a relationship with these end use customers, that's a much easier game to play because as you develop the relationship with the customers, it's a lasting relationship. We all know what a Walmart feels like, right? We all know what a Lowe's or a Home Depot feels like. You know what the tone of these stores are because you, as consumers, have developed a relationship with these stores for many, many years. You know what to expect when you step in there. The same is true with these Canna Cabanas. They're building a relationship with the end-use consumers. And I just see that basically every commodity, as it becomes more and more fungible and more commoditized, the producers are not where the money's at. And so I won't touch the growers because the only way for them to grow revenue is to grow more weed. And when everybody wants to grow revenue, all of their solution is to produce more. And when everybody's producing more, guess what happens to the price? Guess what happens to your margins? Yeah, everything collapses. That's what's happening in Canada. That's what's going to happen to every single market in the world as it reaches maturity. The price of the commodity on the wholesale level is going to crush all the way down so far that the margins are going to become unattractive. And then the only people in that industry that are going to make any money are the retailers. And, that's why I'm here and not at Green Thumb Industries. Like if I had the opposite thesis where the growers were where it's at, I'd have my money in Green Thumb Industries and 2 or 3 of the other growers that I know are high quality operators. But I'm not into the growers. I'm into the retailers for this very reason, because I see what happened in coffee. Name me a coffee company that grows, that's publicly traded.
Can't even think of one.
Why don't you go ahead, Fabio? Why don't you share one?
Right, there it is. Yeah, right. So what do you think is going to happen to the growers 10, 20, 30, 40 years from now when this commodity is super fungible, when everybody has access to it, when it's not that difficult to grow it, when there's thousands of people that have the knowledge on how to grow the really high quality, really hard to grow stuff? The competition is just going to go through the roof, and none of the growers are going to make any money at all. That's been my thesis for many years now, as it should be for every commodity as it approaches maturity. When it's scarce, it's the opposite, right? It's a seller's market, right? But when it becomes less scarce, it becomes a buyer's market. And we see the same thing with real estate. We see the same thing with basically every industry. You get the I think it's like the bullwhip effect or whatever. There's lag in the supply chain, and there's also lag in supply and demand and all that.
I don't understand so they're saying that you're wrong because of some other things, and then they point out this company I looked them up, but they're a grower.
Which company?
The one he just said. They have stores, but they're also a grower. Seed Junkie.
Yeah, there are like hundreds of cannabis companies that are growers that also have stores. Like Green Thumb Industries, I cited, is a grower. They also have like manufacturing and distribution facilities where they package it all up and process it, and then they have retail operations on top of all that. They have all the way from dirt to end use customer. They control the whole line. And if I was into that, there's dozens of companies like that. There are several good ones. If you want me to, I can prepare a list and we can talk about them some other time. But I'm not interested in the growers in general because I know what happens to commodities as they mature, as supply finally reaches demand. With any commodity, imagine, what do you think the price is going to happen to like wheat or bananas or oranges if all of a sudden, supply becomes virtually infinite and anybody could just grow oranges in their backyard, right? Picture.
Let me tell you about yield max. Let me tell you about that.
You'll just get infinite returns.
I know.
Yeah.
Unlimited wants, unlimited needs.
I'm being like the narrator here, but if you read the counterpoints, it's like you guys are talking completely different languages, because now he's saying there's no margin. Yeah, for the grower, retail operates differently. It's about acquisition price and disposition price.
Yeah, and volume. It's about
volume and turnover.
Yeah.
If you're in the growing business while having the stores, yes, you're gonna get cooked because your input costs and production are gonna cook you.
Yeah, well, and the retail side's not typically very high margin. The growing side's typically pretty high margin, right? And so, but if prices crush, is the retail half of your business actually going to be able to overcome the losses from the growing half of your business? And I really doubt that. We're seeing that up in Canada. There's a bunch of Canadian companies that have already gone into this situation where they're vertically integrated all the way from dirt to end use customer. And as the price of the wholesale price collapsed and their flat costs involved in growing didn't collapse, now, many of them are growing it for negative gross margins, right? So the more they grow, the more they lose. It's a real bad idea. But if they're also selling it for a slight profit, they can make up some of those losses. But do you really want to be in an industry where or in a company where half to a third of the company is hemorrhaging money? And plus the cost of expansion for a business model like that, it's huge, right? You got to set up grow facilities, you got to set up distribution facilities, packaging, warehousing. You have to store product, all that, and then you can finally set up a retailer. High Tide, I believe, all they need is a handful of small distribution facilities for storing inventory, right? Shipping, organizing inventory that gets shipped to the company. You got to have a receiving location for all that, where it gets received and then distributed out to a bunch of stores. But they don't need a grow facility. They don't really need a packaging facility unless they want one to offer these high margin brands to like the elite customers and stuff. So their expansion costs are ultra low compared to their competitors. I think the first time I talked to you, I was like, pull up their asset turnover ratio, because that's revenue divided by assets. And so they have a very asset light model, which means that any money that they get, they're going to be able to very quickly turn into new revenue. Whereas these growers, they have a very asset heavy model. So it takes a huge amount of capital for them to be able to grow into a new market. They have to have a much larger pile of cash to, say, for example, expand into a new state. Like if they wanted to put up 20 retail locations, High Tide could do that for a certain number of dollars. And all of the growers, because their business models are so clunky, it would cost them a significantly higher number of dollars just to set up the infrastructure, just to get everything, the skeleton of everything going.
Yeah. And I think, not to be the translator again, but distro is for vertically integrated. So you said something and I understood you in the language you spoke. But I think there's a miscommunication that's continuing to happen. But a distro, is for vertically integrated. And you're making the argument, I'm understanding you, that vertically integrated model is one that will fail. Yeah, correct.
Well, it will do not super well when it comes to growth. So it might succeed really well long term. It just won't grow really well, right? It won't take over the world. It won't become a global player, right? I'm not here for some regional coffee company. I'm here for Starbucks. Mm-hmm. I want a company that's going to has aspirations to be in every country that will let them in.
Yep. And you're saying High Tide is not, so just we're doing the proper translations here. It's not a distro.
Correct. Well, it is when it comes to the glassware, but not the cannabis.
Yeah.
Right. And so they have relationships, or they own. It's a little unclear. They're acquiring glassware in Southeast Asia, in the South Pacific, in places where it's cheap to produce. And they're shipping that all the way across the globe to places like Canada, North America, Europe, England, stuff like that. They have a customer base there, and that is basically vertically integrated. But they are not vertically integrating the cannabis, the flower, the concentrates. They're not producing it. They buy it wholesale, they resell it. Sometimes they buy it wholesale, repackage it into a brand, and then resell it. But they do not grow it.
They're showers, not growers. But that's the kind of companies we like to invest in here in the Cash Flow Kings. But I want to ask everybody on here before we head out, because we're almost at the hour 30 mark. What is the approach? I know, Blake, you're probably the heaviest and high tide out of all of us when it comes to like allocation, but how are we all approaching it allocation wise? Fiscal, do you want to start?
I mean, I probably would like it to be somewhere in like the 10% range of everything I've got.
I'm going for
hanging out around 7% for me of like total wealth. But it's like 90% of my portfolio, my brokerage is like I have multiple brokerages because most of my money's in real estate. So I'm actually thinking about de-risking away from real estate and then putting more money into the market in general. And if or when that happens, I'm going to have to ask myself some serious questions about how much of my total wealth I'm willing to put into just one company, even though my conviction is really high. Even though I see the opportunity, I know too much about risk to put all my eggs in one basket. But so I like to tell people I have an irresponsible amount of it in my brokerage, right? 90% is outrageous, but it's not an irresponsible amount of my total wealth. So I wish it was higher though. And when people ask me how many shares do you have, I always say not enough.
Yeah. And you're going to go first, Ryan, or you're going last? I'll go.
Ladies first.
Ladies first. All right, I'll take it. I'll take that as a compliment. 2024.
It is a compliment. Yeah.
Thank you.
Target.
All right. So, for me, it's I'm embarrassed to say, with everyone throwing their percentages out.
Didn't you recently sell some puts?
I'm selling puts. I'm in the process of selling puts. But as far as percentages go, it's not going to be. I think at my target for the puts at current, it will be around just above 1%.
Hey.
If all the puts get exercised, and the premiums on the puts are pretty good, so my break even's quite a bit lower. And I'm working with my broker trying to play with the bid ask, and I'm being a little bit too greedy, if I'm being honest, because as Fiscal knows, I was talking with him the other day. I was trying to get the $1 on them, but I didn't really get any bites, and I only got a few 25 contracts executed at 95 cents, so not the worst. But I'm trying to get some more, and maybe I'll just settle for 90 cents. So
yeah, I've been side eyeing the puts as well. Just I would love to get filled at 95 per contract.
What broker do you use? If you
I use Schwab for the buffoonery.
They tend to be good at being able to get the some good executions. Merrill has been really good. I used to use Schwab too. Merrill's been really good at getting contracts specifically very close to the ask.
Yeah. So, I need to free up some cash to do it.
Bids.
Yeah.
I said ask.
I'm at 1% right now. Okay, it actually could be a little more. It depends on if the portfolio is up for the day or not. Starbucks is doing good, but
by the way, I'm not at 10%. That's like what I'd be comfortable letting it build up to. I'm probably closer to 6 or 7, depending on, because I've had some stuff run up recently, like Amazon and MPW have both increased a lot in the last couple months, while High Tide has fallen. So my percentage has actually dropped a little bit because of that.
Yeah. I there's nothing stopping me from buying more, though. I've only gotten more convicted, and I'd probably, I don't know, my average is like, I started the position at 202, then I added more at like 180. So I think probably if we hit like 190 or 180 again, I'd start dabbling again.
But
it's easy because you don't got to put a lot into it.
Definitely want to take advantage of the dip and get some more in, though.
Yeah, for sure.
I'm always thirsty for more.
Yeah.
Brian, could you pull up the 3 charts? I know you want to wrap up soon, but I wanted to talk about margins for a couple minutes, because mostly because
the reason we know how to have margin
We just saw Q3. Yeah, pull up the top chart if you could like zoom in on that or make it bigger. We just saw Q3 results like 2 weeks ago. Q4 is when this company does write downs, right? And I'm not expecting a write down, but if one is going to hit, it will happen next quarter, right? It'll happen in the Q4 report. So 2 Q4s ago, they wrote down the value of all their CBD assets, right? It turns out CBD was a highly discretionary good. And when inflation hit the consumers, they decided that they just plain didn't need to buy as much of it. And so the revenue and the margins for the CBD industry as a whole, not just this company, the entire industry, they all collapsed. Demand collapsed, margins collapsed, bam. All of a sudden, CBD companies went from highly profitable, high margin businesses to trading in the gutter, worth almost nothing, not profitable. Many of them went out of business. Many of them are losing money. Thankfully, they're just a small component of this company, right? So they wrote down the value of the CBD industry of the 3 CBD companies, right? Last Q4, they wrote down the value of their websites because similar to what happened to CBD, only far less pronounced, and it took them far more time to play out. Demand for the glassware through the websites dropped off. And so at the end of 2023, they were like, hey, we have to revalue the value of these assets. They're not worth as much because they don't generate as much revenue as they used to because demand across the entire industry is down. So whatever. But for me, I just want to warn everybody, if a write down is going to happen, it will happen next quarter in Q4, right? And I don't see any, you could go into their reports where they break down component by component, each like segment of the business, how well it's doing in like the last annual report. I don't have any indication that any one segment is doing any better or worse than any of the others right now. Maybe I'm missing something, maybe I'm not paying enough attention, but that's just what I've been seeing is basically more of the same. So I don't really expect another write down. I also, when the consumer like confidence goes higher and they go back to discretionary spending, demand for these products will go back up, right? Demand for the glassware will go back up. Demand for the CBD will go back up, right? This company is supposed to be suffering right now. 2 of their segments are suffering. The company as a whole is still doing just fine. So before we move on to the second one, I want you to look at gross margins, right? We can see the tail end of when they instituted the discount model, their gross margins collapsed. It was in the low 30s, then it fell into the high 20s, and then it's been hovering between 26 and 28 for the last like 2 years, something like that. So anytime it goes up to 28, people celebrate, and then it drops back down to 27, and the bears are like, oh, your margins are collapsing. And all I see is like, well, it's just bouncing around between 26 and 28. So as long as it doesn't fall below 26, I'm not going to panic. And as long as it doesn't go above like 28 and a half or whatever, I'm not going to declare victory. But I do expect margins to very slowly crawl up back toward the low 30s as competition goes out of business, as they acquire additional like high margin offerings, more brands, they buy more brands, they develop more brands. Not quickly, but I'm expecting gross margins to slowly grind back up into the low 30s over like say the next 4 or 5 years. So let's go to the next one down. So this is with adjusted EBITDA, right? And I already know EBITDA is bullshit earnings. Right, as the famous words of it, was that Charlie Munger that said that, or
Charlie Munger,
Charlie, right? Not Warren?
Yeah, it was Charlie.
Earnings, right? Adjusted EBITDA is when you're unhappy with your bullshit earnings and you decide to fudge some numbers. And so what they're doing is they knock out unusual items. So if you take out the write-downs, if you take out any unusual expenses that were like one-time expenses that are non-recurring, you should get to a reasonable value for adjusted EBITDA if you're doing it using like a reasonable and ethical methodology when you're fudging these numbers. So this is adjusted EBITDA margin, this is operating margin, and this is cash flow margin. And we're seeing all of them vary, they fluctuate, right? But the general trend is that they have improved. And this is fantastic, right? These are long-term permanent changes to the business model that have produced long-term improvements to margins. So these are versus revenue, right? For anybody who's not real familiar with accounting, when people tell you margins, they're talking about a specific number versus revenue. So go down to the third one,
And I like to look at efficiency. And what this does is any variation in gross margins, right? You can knock those out. So you can call this normalizing or scrubbing data. And so instead of dividing by revenue, you can divide by gross profit. And anytime there's a fluctuation in gross margins, that will cause like ripples on all the other numbers. And you can knock that out, right? If you divide by gross profit instead of revenue. And then this is a measure of efficiency. You will not see very many people look at companies like this. This is just some obscure thing that I do. But what I'm seeing is that efficiency has pushed up above zero and is pushing its way up into, the 20s and 30s and stuff like that. We can see adjusted EBITDA is pushing up in the high 20s. And that's a really, really attractive percentage for a discount retailer like this to have improved all of their flat costs. They've pushed those down. They've pushed administration down. They've pushed every cost that they can down while opening new stores and growing revenue. And so when you have flat costs remaining stable and or grinding down a little bit, and you have dynamic revenue growth happening through new store openings, this is a fantastic situation to be in, because as your revenue grows, the company is just going to become more and more and more efficient as your flat costs get smaller and smaller compared to the revenue of the entire company.
Well said, Blake. Blake, how was it talking to Jay from YieldMax?
Jay is highly charismatic, and he will answer literally any question. Like I've asked him a couple of curveballs. I've never asked him like a super hostile question, but I've asked him some difficult questions where, like, I'm talking about complicated options mechanics and stuff like, and he just fields them no problem. Like, he hits curveballs real well.
That's what I actually watched your whole. It was like your 40-minute interview from like was it 2-3 days ago?
We recorded it like a month ago, and then we had technical issues where Coach couldn't figure out how to upload it from StreamYard to the YouTube account for like 3 weeks. So we recorded it for a while, and then we posted it more recently. Yeah.
Okay.
The sweaty pumpkin.
I definitely enjoyed that one. It was an interesting thing, and I don't know. I'd be kind of interested in having Jay on potentially if our audience would be up for it.
I asked him if he'd ever be up for like being interviewed by a hater, and his general answer was like, sure, as long as they're polite, as long as they're civil and they're like say for example the interview that Strongman did with Meet Kevin like 3 years ago. Yeah. He had Meet Kevin on. He was very cordial. He was very polite, stuff like that.
Yeah.
If you're going to call Jay names, I would not set up an interview with Jay. But if you just want to ask him some tough questions and talk about the mechanics of his funds and
let me put it this way, I don't hate Jay.
He will totally come on and do that.
I don't hate Jay. I can't speak for Ryan, but I don't hate Jay. I don't even hate YieldMax. I just hate a lot of the people that buy YieldMax products.
I think people are just misusing their products, and they're the type of products that are just screaming to be abused. So that's part of the problem.
That's the kind of thing I'd be interested in, like asking him about, not like in a hostile way, because it's not his fault that people all in on margin his.
But is he complaining though? That's the thing. Is he complaining that?
Well, I mean,
customers from that,
Yeah, I mean, like, if you're going to chase cash flow, it should be a small percentage of portfolio. You should only be using it to help you, like, pay bills and stuff. Like eventually you have to call enough. Like, let's say you have a $6 million portfolio. It should not be all dedicated to cash flow. That's silly. That's absolutely silly. You should have a small chunk of it that's dedicated to paying your bills, and all the rest of it should be into growth, And so you should be maximizing your total returns. And many of these YieldMax devotees, they believe that the way to grow wealth is to buy income, and that is not how that works. The way to grow wealth is to buy growth and wait. You don't try to shortcut the method. You buy something that is going to be worth a lot more 10, 20 years from now, and you just wait.
Yeah, Fiscal, we got to acknowledge yesterday. Khmer was like, there's a cash flow. There's a channel called the cash flow something, but they don't want to invest in the cash flow. Go ahead, Bobby.
Companies that produce cash flow. It's that. I mean, that's the whole point of it. That's what makes an attractive investment attractive. This is why I don't buy gold. What kind of cash flow does gold have? It's a collectible. Cool. It goes up in value. Cool.
It's an inert an inert, noble metal, basically. Yeah.
It's not even used like in industry as much as like say silver. Like if like personally, I would be more inclined to invest into silver than gold because the world's industrial system consumes silver. Like every time we drop a cruise missile on somebody, there goes like 15 pounds.
Don't say that.
Vaporized. What, Capital?
He didn't mean that. Don't schizo him, please. All right, anyway.
Oh, people are gonna get upset that I'm not a gold bug.
No.
No, I think it was the cruise missile thing.
Oh no,
Why
I'm
would
just
you
saying,
repeat it?
People don't realize how much precious metal is in one of those things because they've never looked it up. Like it's a shocking amount of silver is in there.
Stop. No,
I don't understand what's funny.
You're invoking him.
Oh no. He's going. We can't pull those comments
once
up.
he starts. You can't be held back. It's
can't put that genie back in the bottle.
It's too late.
It's like the Incredible Hulk. Dude, it's like the
oh
Hulk.
gosh, he's getting worse.
It's like the Hulk, dude. You can't.
I love him so much now.
I do.
He's so funny.
I'll address this because it actually is funny. I don't know if it was or not. There was a random account that joined my Discord like 2 days ago, and it might be him on like an alternate. And he's never said anything in the Discord. And this randomly today is like he tagged me. He's like apologizing for making the video or whatever. I don't know if it's him or not. That's the end of the hour 40 long kind. Yeah, we'll see. He said a video's downloading, so one stipulation: he's got to be on his hands and knees when he makes the video, and he's got to say subscribe to the Cash Flow Kings, our new intro.
So, yeah, maybe it is him, but I wanted to say that whatchamacallit, my pushback to like Jay, because even if you have like a fairly large portfolio and you're gonna produce cash flow from it, I genuinely think, like, I truly believe this, it is going to be like a natural consequence that just occurs, spendable money. I mean, so it's like real world examples, right? So if you're running a $6 million portfolio, you probably have positions that are well in the several hundreds of thousands of dollars, maybe even a $1 million position. And depending on what it is, like an example I can give is like TSM. So TSM, you can sell pretty out of the money calls right now. And I just did this. That's why I'm saying, and you can generate, and when I say pretty out of the money, roughly 260, 250 between there, you can generate like $4,000 for just, well, depending on how much you have. Yeah. For every like $130,000 you have, you can generate like $4,000. And like if you're running with a $6 million portfolio, you're at the problem of like, okay, geez, how do I not make as much cash flow, like controlled cash flow? Yeah, because the government's going to come in here and say, oh, you had a good year, didn't you? Oh, that's cute. Oh, what about my cut? I worked so hard with you.
And it's like reasonable to dedicate a small chunk of a $6 million portfolio to cash flow, but a huge majority of it should just be in long-term growth, should be in things that are going to compound in the background for you, not generating taxable events, because you just buy and hold some shares and just wait, or land. I'm a big fan of real estate.
Yeah.
If you get the right piece of property, it can grow in value for you pretty significantly over time.
Yeah. And the other part of it is like there's let's take Meta as an example. I probably guarantee everyone listening that Meta, in, let's say, barring some crazy destruction of the company, in 10 years or so, that dividend that I'm being paid now is going to be something I could probably live off of. If I'm being honest, like that's something about, waiting patient, buying any of these products, all that cash flow is fleeting. And I say cash flow hesitantly also because it's like, if you look at their income statements that they have released, a lot of it is just like it's not actually income to you. They are returning your capital because they actually lost money, but they're keeping the distributions the same. Right. So you're only up in many of these products because the dividend, because the distribution. is so high, and that's the only reason why you're up. But a lot of that distribution is from just your own capital that they gave back to you. So it's like my question only to Jay, and that's why if I were to host Jay or something like that, it would be like kind of boring because it'd be one question only. It's like, what is your purpose? Like, what are you solving for me? I don't think you're solving anything for me. There's no if I have $100,000 portfolio, a $10,000 portfolio, $1 million portfolio, a $6 million, $100 million portfolio, I don't see a purpose. And the bigger I get, the less of a purpose I see for you.
Yeah,
truly.
Like, yeah. Well, because I mean, if you think about it, for that 1%, it becomes more and more worth it to just do your own damn options, right?
Yeah. Or even, you know, the tiny little dividends that growth companies hand out. Like if you have $100 million portfolio, you can buy like Microsoft and Nvidia and collect your like minuscule dividend and live off it just fine.
You wouldn't put it in AMC?
The larger your portfolio gets, the less attractive covered call strategies become.
Listen,
and
after
the
2
more
quarters, free money,
dividends become
guaranteed.
Yeah. I should clearly be reading the comments. Is that what's going on here?
How do you?
Clueless because I'm not reading the comments.
I'm laughing because the comment he said then and then right after.
Oh, okay. Yeah.
I'm not schizo.
Yeah. There's no correlation there. None whatsoever.
For episode 100, we'll have retiring dividends on. We won't have Jay on. We won't have Strongman and Echo's debate for the presidential.
No, I don't think it would be wise to have. We'd have to make that episode members.
We should.
So with YieldMax products, I think the only thing, like I found them really interesting, but the only thing I found attractive about them was that they could be hedged, that you could just buy puts, and that the cost of getting into the put was less than the distribution they're going to hand you. And so if you're confident that the share price is going to trade sideways or go down, you can just place that bet. You can buy shares, buy puts with a strike that's like, you know, a couple dollars higher than the shares you bought. And sure, there's some extra value in there. You're paying a little bit extra for the puts, but what you're getting is you're getting a higher delta situation. It's going to provide better coverage for you. And the cost of doing that was like, the last time I looked it up was like half the cost of half the value of the distributions. So then you set yourself up, instead of a 50% yield thing that goes down, now you're at like a 25% yield bond. And basically a 25% yield bond would be super attractive, except that part of that value, the hedge, you have to pay both long-term and short-term blended taxes on because it's an option position.
Right.
But it isn't, but then the counterpoint to that, wouldn't you be still at the massive risk of an individual stock selection? So let's say you're on Tesla when you're doing this, and it doesn't crash on the ex-dividend day, but it crashes on another day, like another business event occurs. You know, the thing craters. You might be lucky and have the puts.
Yeah. What I'm saying is you only own the shares if you're also going to cover it with puts. And, you know, like
you have to be constantly covering it.
Yeah. Yeah. 100% of the time. You buy puts with like 6 months of time on them. And then like when 3 months hits, you roll to deeper out. So you don't take too much in theta losses, and you just constantly roll. And every time you roll, it costs money. But the amount, the last couple times I looked this up a few months ago, the cost of constantly rolling these puts was about half of the value of the distributions. And that's been the single most attractive thing about Tesla to me. It's not the cash flow. It's the fact that the cash flow is bigger than the cost of hedging.
Look at this Chavez loving boy over here.
We actually have a Make-A-Wish, everybody. We have the Cash Flow King has recently passed 600 subscribers. So we have a Make-A-Wish. It's a Make-A-Wish kid. He wanted to come on. It's his last days. He got a new haircut, so he's on.
Well, now that he's on here, he has to answer some questions like, what did he think about the most recent High Tide earnings report?
Yeah.
Yeah, what'd you think?
I don't listen to Shitco earning reports, so I don't know. Unless I'm sorry.
Glasses come down.
I'm kidding. I don't follow it, so I can't give it a opinion.
If it will stand for 10 more minutes, that's
no,
Fiscal. We made it to lead the weekly recap. I'm cutting chromosomes right now.
Let's see, high tide. How was the last earnings report? You guys already covered that, I'm sure.
It's pretty good.
It was pretty good, but the share price went down anyways, as usual.
Yeah.
So something was not good.
No, it was good. The content of the report, the numbers that I read, attractive, quality.
This happens every time.
Happens every time. The share price went down. It doesn't. This is the stock market. Things don't have to make sense.
Then why do you buy it? Like, why don't you just sell it before earnings and then wait for it to go down and then buy it again?
I'm just gonna buy stuff.
Think about this. I have the advantage of waiting until after every earnings call. The earnings report hits, I get the call the next day, and then I can wait like 2 or 3 weeks and be super patient about buying the next bottom. There's no rush. It's been like this for a few years now. That's just the way it works. Goes up into earnings, really attractive earnings report hits, share price goes down.
Does it have a lot of There's context there for that joke. I promise.
I promise there's context.
Yeah, we tire of David.
My name has been slandered. I have been dragged in the mud. I have become all these things. I don't know how. I was going to say with high tide, is there a lot of sell side coverage on it, or any sell side coverage?
So it used to be that there were only 2 analysts covering it, and now it's up to like 7 or 8 analysts. Most of them are Canadian. I think only a couple of them are US based. I haven't found anybody printing like a short report or any. I found some bears, but most of them are really kind of dumb. Most of the smartest bears I talk to are not fundamental anything. They're just short-term technical traders, and they just spread FUD, the smart ones. Most of the ones that try to like spread fundamental slander, they just end up sounding really stupid, like single-digit IQ dumb. Like they say things that don't make sense, like the company's not going to be able to pay off their debt, and I'm all like, but they're cash flow positive, and
Well, they don't have a really high short interest. So I don't think that's like what's pushing it down necessarily. I don't know what it would be.
Yeah.
I don't know if there's like someone that holds a lot of it. But
so if you know it's going to go up into earnings, you can just buy like a month beforehand and then sell into like the day of earnings and the day before and stuff like that, and that produces selling pressure.
And I also think we're missing a big point. It's that how much of this stock's float is owned by retail investors?
Like 80% or 75% or something. A huge.
Oh man,
you're asking for volatility, basically.
Yeah.
If that's the case, you're asking for volatility, because then whoever's watching right now, they're invested in it. One day they YOLO'd into it because they like the story, and they get just as easily scared and they YOLO out of it. So you have a fickle investor base. So
no, that's insane.
Well, and there's also people like me, like historically for a long time now, I would sell 10% of my position the day before earnings and then buy it back like 2 or 3 weeks later and then pick up free call options with the difference. This most recent quarter, 2 or 3 quarters ago, I stopped doing that because they hit positive cash flow. I was too scared. This most recent quarter, the day before earnings, I sold $5 calls. And I'm like, hey, if this doubles overnight and these calls actually take my shares away at $5, and like when October hits for the expiration I sold, I'll be happy. I don't care. I will just buy back in later at some low that I find. I won't get upset about having these shares called away. I'll just be happy at the short-term gain. Yeah.
Random question, because I'm looking at the holders right now and it just made me think of something. A question for Fabio. Who the macro guy that we used to like but like don't like anymore because he kind of went crazy with Steve Van Meter. What's his name?
Jeff Snyder.
Yeah. Didn't he work for Cambria Investments, or was it okay, because they have a position in it?
Yeah. Cambria Investment Research.
Yeah. So
but he's no longer affiliated with them, so he went a little overboard. He went into, if I do doomer content, a lot of it, people will pay me.
Mm-hmm.
And
that's also part of the bull thesis, is that institutional money has yet to show up because they're basically not allowed to, right? And that's when the market will really truly move, right? Those 2 euphoric rallies that I talk about all the time that happened in like 2018 and then again right after Biden got elected and stuff. that was retail moving the market. Retail pushed cannabis up to the moon. That was not institutions. That was not, I mean, there were a handful of hedge funds that got involved, but they were trading it. They weren't like long-term investing into it. And I think the next time around, the next rally, because it'll be because of a fundamental change in laws, I think institutions are going to finally get involved in the industry in potentially a major way. And so like this company that we're sitting at something like 80% or whatever of retail ownership, that's going to shrink. Right, BlackRock is gonna realize they have to have a small exposure to this company, and not just BlackRock, but all of them. I'm just using that as an example. They'll come in and they'll buy 5% of the float, just because there are companies that require exposure to basically every company, like BlackRock and stuff. Same with broad spectrum market ETFs, the higher its market cap, the more it's going to become present in things like the QQQ. It's gonna go from a ultra tiny minuscule percentage of QQQ to a slightly higher percentage of QQQ, and that will provide some stability and get rid of some of the volatility as well.
Why is there a reason that Canadian investment management firms can't invest in them?
No, they can, but they're so sour on the industry as a whole because margins keep collapsing and the wholesale price keeps collapsing. And they see the retail half of it as oversaturated because there's thousands of like independently owned like ma and pa operations, and they see a large litany of 20 to 30 chain operators shuttering. They're all going bankrupt. Recently, it was Tokyo Smoke is the most recent one. Trees went bankrupt. Fire and Flower went bankrupt. It's a long list. Yeah. There's a you can look up Canadian bankrupt retailer. You will find lots of articles on multiples that have gone bankrupt over the last 2 years.
I'm just really quickly going through the report. Can you tell me why their gross margins seem to be in decline, or on an annual basis?
You mean from last year?
Just like if I look at a trend.
Yeah.
So let's say I start at 2020. They had 37% margins, 35% margins, 28% margins.
They switched to a discount model.
Okay.
From a convenience model to a discount model. And then for the last like year and a half or 2 years, their gross margins have been pretty stable in the 26 to 28% range.
Yeah. Gotcha.
I just wasn't sure if you were talking like since last quarter. I'm like, I can't really answer from quarter to quarter. I don't really know. They do have a local pricing scheme where if their competitor across the street, for every small town, for every suburb, all over Canada, they check the competitors' prices and then ever so slightly undercut them.
Gotcha.
So that will affect gross margins on a macro scale. Let's say Value Buds, their other major competitor with like 60 stores. Let's say they do a 10% off sale. Well, all of the High Tide owned stores that are within a few blocks or in the same neighborhoods or the same small towns as a Value Buds, they will drop their prices in response so that they don't lose market share, so they continue to retain their customers. So that will affect gross margins quarter to quarter if a large enough competitor is doing that sort of thing. Like Value Buds, they've got like 60, 70 stores, something like that. They could affect High Tide's gross margins because High Tide is perpetually fighting a price war at all times.
As all retailers, to be fair.
Yeah, as all retailers are, yeah.
Yeah, because I mean, you go to any retailer, they have everyone has a price match, for example. Yeah. Everyone has it. So it's up to you to be like somewhat informed consumer with a cell phone that works.
Mm-hmm.
You're on any store and you're like, can I find this exact product cheaper elsewhere? If the price is higher, you show the store and they're like, okay, here you go.
Yeah, and when gross margins collapsed, I was initially concerned for a few weeks, and then I looked at like Costco, and I'm like, I'm not worried. If Costco can do just fine with like 13 or 14% gross margins or whatever they're doing, High Tide with a similar discount, elite paid membership model, they will eventually find success up with in the gross margins up in the upper 20s. I think that they will eventually be able to push back up into the lower 30s, like long term, like 5 years from now and stuff, but I don't think I see that happening over like the next year.
Mm. And I mean, I think actually, let me check real quick, because gross margins in the 20s for a grocer, that's mid 20s, that's pretty high.
Yeah.
So typical retail, I mean, you won't find Like, for example, Kroger is at 23.
Well, just I thought their margins would be expanding, right? Because don't they have like a membership program, kind of like Costco that you said? So I thought if those memberships grew, the gross margin. But this is why I'll preface it. I'll just say this: I don't have to know everything about every company. I don't have to have an opinion on every company. And this is one that, like, I've listened to you guys talk about a little bit, but I don't have my own opinion on. So I'm asking these questions just out of pure curiosity.
Sure. No, we want to hear them.
Yeah. But is there a reason that the margins wouldn't expand if they were getting more like Costco memberships, so to speak, or am I misunderstanding the model?
So it's hard to say how much those will positively affect gross margins, because those Costco elite people, they interact at a lower price. So they, like, every time you get a normal interaction, it's at a specific margin, and when you get an elite member and they come in and they've already paid the annual fee, they will interact with the company at an even lower, even tighter, smaller margin. And so it has to do with how much volume those customers produce and how many people are switching over to elite, right? Because every time a customer switches from being a normal discount customer to an elite customer where they're paying the annual fee, assuming that their consumption and their purchasing habits don't change, their revenue for that customer should go down, right? Because now they're buying everything at a deeper discount, right? But the quality of income, like, yeah, maybe you can look at it as EBITDA or whatever. Their EBITDA just went up for that customer. So it's hard to say, like, what will that do to gross margins, which I think that's what your question is. Like, revenue goes down, EBITDA goes up. How does this affect gross margins? And I don't have a super clear answer other than it has changed a little bit. But it's hovering around 26 or 28% gross margins, like the company as a whole. And it sort of just bounces around that range for the last, like, year and a half, 2 years. I hope I answered your question, because I don't really have a clear answer as to how that affects gross margins. I know it affects things. Like, as more customers transition from being a normal customer to being an elite customer, the revenue, assuming their purchasing habits are identical and they don't change, the revenue goes down, EBITDA goes up.
Okay. Well, everybody, I have a crazy development. This is on the air live. This could be members only. We have Retire on Dividends is in the lobby right now. I'm not capping. I'm not lying.
Amen.
Now, Retire, before you say anything, we have to have a few base rules here for the Cash Flow Kings. We need to keep ourselves respectful. Don't get us demonetized. And no slurs. That's my only rules. Welcome in.
Assalamu alaikum wa rahmatullahi wa barakatuh. Hey guys.
Alhamdulillah. Welcome in.
Welcome. Hey guys, what's happening?
What's going on?
Welcome.
How you doing?
Great.
He showed up in, like, the hoodie and sunglasses, like the Unabomber here.
So I'm going to ask everybody who shows up, what did you think about the most recent High Tide earnings call?
I don't think he follows High Tide.
I'm not a fan of High Tide. I think the cannabis industry is trash, man.
And Capital Mindset, that is why it's on sale for cheap. You ask me that, you're like, why is it so cheap? And I'm like, there's a lot of sour sentiment on the industry.
No, I mean, makes sense. That's why anything would be cheap. I mean, it's also mostly retail investors. So
yeah, but I don't mind if sentiment's sour. I use the falling knives method, so I buy stocks that everybody hates.
That's true. Retire. What are your thoughts on Tactical Shoe Shiner?
Sorry, I'm having a echo here, guys. I'm technologically poor.
What are your thoughts on Tactical Shoe Shiner?
Yeah, Mike the Shoe Shiner, I feel bad for the man.
What do you think about
unfortunately, he's online lying to us. And as a father of Asian daughters, I really struggle with the fact that he is always creeping on young Asian women. That's why I don't like Kemmer and the tactical shoe shiner.
Listen,
I call them out.
I know a thing or two about young Asian women, and you got to treat them right. That's all I'll say.
And if you do, sometimes they'll give you a little loan, if you know what I mean.
So, what do you think about his $20K a day hot dog stand?
Yeah, I struggle with the fact that he said he made 30 racks a day selling hot dogs in Kansas. It didn't seem honest to me.
Can I give my opinion on this?
Yes.
I think it's all kind of like irrelevant. I don't know. Maybe I have changed, and Fabio has seen this change in me over time. I just don't care about stuff like this. Like, I think it's fun to talk about for a little bit, but I feel like focusing your time and energy so much on like someone who's like already losing at life is like, they're already like down in like the, in the gulag, and it's like, why go down there? It's like, just kind of like, oh, maybe you can like laugh at them, but like, who really? That's just me though. I mean, like, I call it like, I don't know if I can say this.
You can say it. Look where we're at. You can say it.
I feel like it's like ego masturbation. Like, you're just sitting there and being like stroking off to your own, like, oh, I'm so much smart. Look at this retard. But like that's what a lot of it is. What?
My brother Bill is a retard.
You get him in a cage.
The stuff with Emmer, the stuff with even like for a while, like I would like pay attention, like with financial education, would buy and something like, this guy's such an idiot. And then I realized I was like, I could be like being productive at this time. Like, instead of just like sitting here being mad at this guy who's like really stupid.
The context is that the 5 of you guys are content creators. That's why we can roast Mike and Kemmer. You guys put yourselves out there with all due respect. And if you lie in the space, then it's really easy to roast you. And if you talk like a pedophile, then if you're a pedophile and a pervert and a bigot, then it's easy to get called out.
Well, I don't know which
We're
one
getting
of them
a video made on us, dude.
But I agree with you that if you're putting yourself out there and people go at you, you can't complain. Yeah. I feel like if you're like, oh my gosh, I put all of myself out there and then people don't like some of it, it's like, yeah, you idiot. That's what's going to happen. Yeah. But as the Ryan, as the Fiscal, as us, I just think it's like it's fun, right? It's fun to like look every once in a while and be like listen to them, and it's just kind of like funny. But I feel like there's like no value at all, and so that's just my opinion. But like some people enjoy it. Some people, like, you might watch a movie on Friday night. They're like, I'm gonna watch this idiot and like, I guess fair enough. You know,
that's frankly how I treat Kemmer. For me, he's like my Michael Scott.
Yeah,
he's very dear to me, and I hope he never changes. Just how anyone has a relationship with The Office, Michael Scott, whatever your sitcom is.
Is he going to declare bankruptcy the same way?
I hope not. I'm not done with him. I hope we get like another 5 seasons, like, preferably.
All I'll say is that I think, rightly so. If you do put your opinions out there in the public, you must welcome, not just expect, but welcome the public criticism that comes with putting your opinions out there in public.
You should be proud of acquiring your first hater.
Yeah, I mean, there's some people that you like that you can't reason with, and that's fine. But yeah, like we don't need to name Gil, but or like
that's like you are an idiot.
But yeah, I mean, like, if you put ideas out there, especially and here's the thing too, and I hope I'm not yapping too much, within finance, especially when you're talking about telling people or giving them opinions, it's opinions, not advice. But if you're like telling them like, hey, I really like this stock, you should buy it. Like, you better be open to criticism because you're literally telling people. I just finished. I was listening to that the BBY like YouTube video by he did the GME one first and then he just did BBY. But there's literally people like they were telling like people's families like they put all their money, they took out credit card loans to buy Bed Bath and Beyond because they thought like even after bankruptcy it would come back.
That disgusted me.
Yeah. And so people rightly so should question you on things. And that's what I think you need to be transparent about.
If I could just make one statement. Mm-hmm. The thing that's difficult for me about Kemmer is that he constantly talks about, I'm from a family of immigrants. He constantly talks about how he is the investor, the man for the immigrant, the working class man and the dishwasher, and and then obviously like the bigoted things he says about Asian women really frustrates me as well. But those are the things I find pretty disgusting. So that's the grifty part for me. And I enjoy the banter with you guys, so it's all good and it's all.
We know you do.
So I don't know what he says about Asian women, but I'm sure it's just like he strikes me as the kind of like military kind of like I don't want to say man's man, but like that kind of like personality.
Sounds like the kind of guy that would make an inappropriate comment about one of his own relatives at like a family function, Oh, look at the titties on her this year. Oh,
that's actually true.
Yeah. I'm gonna have two Asian daughters.
I can see him like walking up to like his like, your wife has a nice ass. Like,
that's wild, bro.
I think the biggest thing about Kemmer too, like he has like legitimately like disabled people, in respect to Andrew down there, like literally like. Sorry, Andrew. But like like you could actually like tell you have people on his calls or whatever his meetings and like they're legitimately disabled and they're like taking. Thank you so much, come here. It's
okay, and it's not just that though, but like we tire on dividends was saying, like the working man, the dishwasher, the street sweeper, the janitor, like. If you're in one of those fields and you got like one shot at where you're going to put your like very limited investable dollar, you probably shouldn't be putting them where, somebody like We the Khmers says you should put them in my personal opinion there. Yeah.
Yeah. He's selling hope and he's selling this idea that what he's going to do is going to work out really well. And it's highly unlikely to work out really, really well. So I personally think that there's definitely some like a lack of ethics involved there, where I believe that he knows that what he's doing is substandard and subpar and does not produce attractive total returns.
Well, you're trying to sound so professional, and I love it. By the way,
I'll
help you out. I know.
Gentlemen, I'd like to introduce someone, if I may. This is the notorious TIG, also known as Pinky Small.
That was good timing.
That kept me out of it. Wow, it was like on demand. Yeah. So what were you going to say, Fabio, about Kemmer?
Yeah, well, just a side commentary that, he, to Brian's point, he has some people with maybe some mental disabilities, but, I could argue that he himself is among them. So, I mean,
that's fair.
At this point, and I generally kind of go back and forth. Like, I kind of feel bad if I, lay any criticism on him because maybe he's not capable, capable of understanding what he's doing.
Does anybody know? Like, can we still get into his? Does anybody still have like a way to get into his Discord and ask him questions?
Beater stocks.
So
that's your guy.
So I've heard that a good way to actually test if somebody is genuinely low IQ is to ask them a conditional hypothetical, because they won't even be able to understand the concept of what you mean by asking the question. Like, and by that I mean, and this is the example that's always given out there. How would you feel if you didn't eat breakfast or lunch yesterday? And if they did, they'll just be like, what do you mean? I ate breakfast and lunch yesterday. They won't be able to understand that you're
asking them a conditional hypothetical of how they would feel if they didn't do the thing that they actually did. They can't process that for some reason. If you're below a certain IQ, that's
he's already asked conditional hypotheticals, but through investing. He's like, how would you do it if, like, you know, for example,
you're banned.
margin called. Like, but I wasn't margin called.
But I'm just saying, like, ask him like maybe an easier one, because I think it's clear that investing concepts confuse him when because I you know, he couldn't even describe to you what like a call option is or what a hedge is. So ask him something that's like not investing related, but that is a conditional hypothetical, and see if he has the same meltdown. It just means that his intellect is incredibly low.
You don't think any of it's language barrier? Just to be clear.
With the investing stuff, it might be, right? Because his grasp of the language is not great. Like, he thinks that underlying is underline.
Yeah, he's had like a year and a half to learn these words.
Like a line under something. That's how he writes it and pronounces it.
Yeah, he's had plenty of time to catch the vocab. Like, he's been doing it long enough to should have picked up on it all by now.
The best are the replies. Like, and if you look at his comment section, people will be like, "Yeah, I don't know about this." He'll just be like, "Okay." It's like one word reply.
Okay, yeah, he's okay. Okay, I've seen those. Yeah, because I try to rule out some things when he talks. The two things I think is either like the way that he processes words, or like written words, and I think either language barrier or dyslexia. But like, and I mean, that's kind of like what I think. But like, I don't know. I could be just being too generous.
And there's definitely a language barrier, but I don't think the language barrier is the problem. I think he's just really hard-headed, and he refuses to be anything but stubborn. And you know, and then there's the whole like, because he's the leader of his own little group there, and so when you're stuck in like a leadership role for a groupthink activity, you end up adopting all the aspects and tenets of like fascism, which is where he went down. You know, he's banning people. His word is law. His authority is everything. You cannot question him. You know, and if any tiny little question is a criticism of him, and you're gone. Boom. And so like there's a problem there.
By the way,
do you have any DL things that Jay said about Kemmer you can release on tonight's Cashflow Kings?
So the like the behind the scenes stuff, like when we talk to Jay off camera.
Yeah.
So the first like the only thing I'm going to comment here on this is the first like 4 or 5 times Kemmer was brought up, Jay was like, who? And that would be like psychologically devastating to Kemmer to like many months after his love letter to Jay video, Jay was still saying who? Many months.
It's funny because
you know, I'm getting a Rexter shirt, but go ahead.
Because if Kemmer is the cult leader, Jay's the god they worship, right?
Of course.
Yeah. And to be unseen is like not a good position for him to be at, where he's literally devoting whole videos to Jay Pestroshelli and these strategies, and then Jay is. They're just under the radar for Jay. Jay's so focused on his day-to-day job and his life and running his fund and stuff like that. He's not paying any attention to these YouTubers.
But you know, it's funny you mentioned that the way that his community is structured, like a fascist state. I actually intentionally make my Discord the opposite. Anybody that's on there can tell you. Like, I even get complaints about people who like if somebody comes in and criticizes our sacred cow, which is MPW, in my Discord, I get privately approached by like people like, hey, can we ban this guy? And I'm like, well, like, if we're right, what harm does his random rant against MPW do to us? So and even though like the one guy I'm talking about right now is absolutely unhinged and like, but he says he's doing it to be funny or something, so it is what it is. But like, I would not dream of banning somebody simply for disagreeing with me.
You do want to hear the bear case with any investment. You know, like with High Tide specifically, I want to hear the bear case. You know, I want to hear these questions, like, why did gross margins collapse? What's been going on with that? You know, like, I want to hear, with every investment I ever make my entire life, I want to talk to the bears. I want to hear what they know, you know, and I want to know what are the red flags, what are the risks, all of that stuff.
Echo chambers are dangerous.
As soon as you shut out dissenting voices like that, What you're really doing is you're producing a situation where you have less information to make decisions with.
Well,
you want more information to make decisions with. You want a more clear picture of the holistic situation that the company or the assets in. You don't want a fuzzier picture. You want it to be as crystal clear as possible.
So it was interesting because in the YouTube, he's the guy who only puts out a couple of YouTube videos a year, and they're pretty high quality. But this was just about an investing cult, and he started with GME and then went to BBY. And one of the things he said that's like so true, and it's funny, he just put it very well. He was like, as evidence comes out that the thesis is wrong, you would think the cult gets weaker. It's like, but no, it gets stronger. Yeah. Because what happens is, as the thesis gets weaker, the reasonable people leave because they go, oh, the thesis is broken, I'm out. And the only people that stay are the hardcore, like, it doesn't matter what happens, I'm keeping the thesis. And then it just becomes like this insanely strong cult, which I thought was really like, I guess it makes complete sense when you say it like that, but it was like, he just put it very well.
Well, and I have to warn you, High Tide has a little bit of a cult following too. You know, there are investors who have been here through like 2 huge euphoric rallies, and they're still holding shares they bought like 5 years ago. Yes, and they still believe in the long-term fundamentals of the company, and they refuse to sell into the tops. And they average down every time the bottoms arrive. And with any of these companies, not just High Tide, with any like Tesla, everything, with anything with really strong future potential, right? It will attract a type of ultra high conviction investor that theoretically should be listening to every little detail, including what the bears say. But in reality, they're usually buying their own BS. And they're so locked in, you know, like they got tunnel vision. And they're super biased. And this is why I want to hear the FUD. I want to hear the red flags. I want to hear the bear case. Always. With every investment, not just with High Tide, but with everything.
And to your
point, they don't like
guys
with sunglasses too.
And to your point, I mean, there have been a few times I have bought stocks, ridden them up, and then turned around and shorted them. Fabio can confirm this.
Hey, if it's overvalued, it's overvalued. You know, and the fundamental situation.
No, turned out it was a fraud, but he made money on it anyways, and then he.
Yeah, no, it turned out like my bull thesis was actually probably wrong, but like I figured out before everyone else, my bull thesis is wrong, and actually this is a fraud. So I'm gonna short it. So that's literally what happened. Was I was like, oh, okay, because basically I don't want to get too into it, but basically the company was reporting numbers, and I was following them really close, and I started to say, like, some of the things the CEO is saying doesn't make sense. And I was like, still long, and I was like, stuff he's saying doesn't make sense. And actually, I remember at one point people in CM were like, well, should I buy more here? And I was like, I'm actually closer to shorting it.
They had this cash pile. They said it was for this purpose, and then they never used the cash for that purpose. And it was like, why are you holding this cash? You said you were going to do this acquisition. It's like we're on like the 8th quarter now. What's going on? Like we are resigns.
The CEO resigns and says, hey, I'm going to go be on a boat for a year.
Yeah.
I'm going to be in international waters. You can't find me. Bye. It was yeah. But anyways, the point is
there's no cult members for MPW. So
I'll pay the tours on the boat.
The thing with like I would argue like MPW might be like people being overly like because cult will be like if MPW had ended up like losing money and declaring bankruptcy, like the MPW people are like, no, it's gonna come back, guys. It's fine. Everything's okay.
We're just going to restructure the real estate assets into a new REIT.
When it was $10 and $11, I know when it's $4, it's kind of fun, and they showed the juicy div of 30%. But Fiscal, have you been in MPW for 2 years or longer? And forgive me for my ignorance.
So I got my first 100 shares in late 2022. It was about $10.
Yeah,
okay. That was a very small amount. It was like less than 1%.
Because when it was $5, I started looking at it too, and like I don't really buy individual stocks.
Yeah,
but I was like, oh, $5, and I saw the dividend that was pretty juicy at $5, and
$10 is where
to the world
where it was. I mean, keep in mind when it hit $10. It had previously recently been 20 and was looking undervalued compared to like book value or whatever. And I was like, oh, I'll pick up a little of this and see what happens. Why not? Right. While, you know, get a little froth. And then, you know, the next year happened and it like fell more and more and more. And I was like, geez, this is like ridiculously cheap. If this has any kind of a comeback whatsoever, it's going to be amazing. And my cost average is just over $6 at the moment. So I've been hovering like right around break even recently on it. So a little bit more of a roller coaster ride and a journey than what I was expecting that first time I bought a few shares of it. But I think we could definitely see it get back up to 10, 12, something like that. And in the longer run, maybe new highs back, you know, to what it used to be back in the day once certain things get corrected.
I know this is eventually going to bite me, but I sort of stopped looking at book value. When I like try to decide whether something is attractive or not, I usually focus on growth potential and future income and stuff like that. And just because an asset is currently trading way below its book value does not actually make it attractive, because they could be in some horrible fundamental situation, you know, like their entire industry might be under some sort of like moat attack or something, you know. We could talk about examples or something.
It's a hospital REIT, though, you know.
Yeah,
like,
I understand. But I'm just saying, like, just because it's under book value doesn't mean it can't go lower if their fundamental situation.
As I found out, I learned that it can always go lower.
It can always go lower, yeah. And same other side of that, just because something is overvalued does not mean it cannot continue going higher.
Very true. Very true.
But at some point, unless they hit that, it's going to come back. I keep on looking at Palantir at 150 times earnings and like, dude, that's crazy. That's all I see is like, it's
funny. It's funny. Palantir is actually like the one thing that I ever bought where I basically timed the bottom. I didn't time the top, but I got like a 4x on it. That's pretty cool.
I mean, you see, they're trading at 30 times earnings. Sales.
Yeah.
I couldn't touch them because their stock-based compensation was just outrageous.
Yeah. I think, if the valuation is like through the stratosphere and they still have the stock-based comp and everything, it's like at a certain point, it's just like ridiculous. And I was just at a point where I felt like I'd rather throw some of this money into Amazon instead at these levels.
Because I haven't looked that crazily deep into Palantir. The one of two things is the valuation is insane, or there's something that from my quick look at the company that I don't know, that actually there's a lot of underlying earnings like power there.
So
and actually maybe sales side estimates are low.
Here's what I'm going to tell you after my time, because I owned it for a good chunk of time. It was definitely over a year. So in the time that I owned it, and I tried to follow it, what I can tell you is I am convinced that most people that hold the stock could not describe to you what exactly the fuck it is that they do. And that's one of the problems. I probably couldn't describe to you what they do.
I have 2 cents into what they do. They do AI for military companies to commit genocide around the world. Guys, I won't get you doxxed or whatever it is.
Oh, no.
I won't go crazy. Relax. I got you.
I do understand that. Yes, they do. They
and
do
Alex
have a
Karp
lot of
was on
government.
Bill Maher. I invest with my emotions when I look at these companies because I just buy index stocks anyways. But Palantir, Alex Karp was on Bill Maher bragging how what's going to happen when we have peace in the world, when the world finally gets to peace. And Alex Karp is just going to be, and he's a prick here in Colorado. I'd like to see him in a dark alley. But what's going to happen when that prick Alex Karp just laughs about killing kids and how he's so great in killing kids? And it's a geopolitical issue in my mind, but a lot of things are, as you guys may know.
So,
they're good monetization.
Palantir.
All I understood from talking to someone that like demoed with Palantir, at least in the application that they would use it for this one organization, is a lot of organizations, they have a lot of systems that are not synced, or what's the word? Integrated, right? So you have, let's say I think Oracle signed a deal with them, right? So let's
The
say you're
Oracle.
Oracle, and you have 200 different systems, and they all have data within them. They all have their own, things. From what I understand, it was a very rough understanding. Palantir has the ability, they get direct feeds from all those systems, and then they can kind of put them together and shoot out in easy to understand ways all that data and how it goes together and give you actionable insights into your business, which sounds kind of cool. I just think it also has like a limited amount of
I think it's mostly federal government military contracts.
No,
so that makes sense. So
private enterprise is actually growing faster than government at this point. I did follow the earnings enough that I know some of that. Early on in the time that I owned the stock, like they had a pretty big contract with like Tyson Foods, for example. And they were doing what you said, integrating data to like give information that companies can use to increase efficiency or, do some type of something to improve their business. But the nuts and bolts of how it actually works, I really couldn't tell you. And that's part of the problem I have with like owning it at these super high levels. Like I would have to like really, really, really understand how they grow into this valuation to want to keep it.
Well,
did anyone see Alex Karp on Bill Maher last week?
No, I haven't. I haven't watched.
And again,
Bill Maher
you guys have heard my spiels. I won't get crazy on your show, but Alex Karp literally just made jokes, and Bill Maher's a scumbag, but made jokes nonstop about how they're using his AI and his technology in one place in the Eastern Mediterranean Sea where a bunch of Polish people live.
Yeah, no, I know Bill Maher breaks out the knee pads for Netanyahu for sure.
So yeah, sorry, but that's why
I do know that. But
it's and again, can you always invest ethically? I don't know. I'm the wrong guy in your guys' show.
So this is so I actually have a take on that idea of ethical investing.
So you're short Palantir.
Yes.
There's virtually no point in trying to invest with morals or ethics, because any major company, especially if they've been around for decades, you can dig up something that's morally objectionable. You like Apple stock? Well, how about Foxconn's suicide nets?
Yeah,
you like Amazon? How about the basically the shock collars for their warehouse workers and the piss bottles for their delivery drivers, right? Every single company, if you dig enough, you can find something that is pretty objectionable. Nestle,
what about Starbucks?
I've heard of.
What about High Tide?
Nike,
similar to Walmart, there's a lot of independently owned people that are no longer in operation because of High Tide. Because High Tide came in and built a Canna Cabana in your little town.
And some people think that anything that gets you high or whatever or alters your state of mind is immoral to sell to begin with. So any single individual. Hell, I own BTI. How many people have died of cancer or heart disease or whatever because of tobacco products?
Okay, or they age a little faster.
There actually is companies though, Fiscal. There's and again, like I mean, I've told you guys I'm a Muslim. Like there's HLAL. There's REITs they're Sharia SRIA. Like these are things I bought in the past 10 years of my life, and I believe that there's different ETFs that are scanned for ethics via maybe your religious beliefs or anything. And not to get too deep.
How are the returns though?
Yeah, check them out. I'm gonna read.
What's the ticker?
Forgive me.
So I assume that
HLAL and
halal
RIA, I believe.
Does it exclude like money lenders and everything that is like all of the halal forms of investing?
Yeah,
it just excludes all of those. Is it like broad market other than that?
I believe the SRIA is a S&P.
The 5-year chart is up. It's good.
No, they're bad at, but and I got a couple grand in random ones. I don't have a lot of money, but
well, if you want to take banks out of your portfolio, you could just go into these specialty ETFs.
Oh, yeah, and I believe I think these are all for all face and it's not specifically.
By the way, I definitely want to get out of banks. I have one last. I have to wait until early 2025, and then I can get out of Bank of America, and then I'm not going to do any more banks.
So I don't like banks because they're super intangible and they're hyper reputation based. And all it takes is a single event to wreck a reputation on any financial instrument, anything like banks. And it'll just get jaded forever. And I can't touch that.
So you're right though. It's we all could micro, analyze everything and find, as humans, we're all imperfect, of course.
What is
Look what I write on Discord.
Yeah. And so I've simplified my life by just taking the moral and ethical questions out of it and just trying to focus on, just finding good returns is enough of a task. Especially if you're newer.
I found all you guys because Strongman, because 20 years ago, someone started telling me to buy the S&P 500 and I like watching Strongman because he roasts people. And it's index investing. I have so few random stocks because it's too hard, man.
Now you can afford a Cash Flow Kings channel membership. That's where it can get you.
It's true, fellas. Yes, it's a great investment. It's changed my life.
That $2 a month is the best investment you could possibly make.
Retire on dividends. I want to give you 10 seconds. Actually, 10 might be a little too much. I'll give you 5 seconds. You go completely unhinged, only on Starbucks. Go.
I think the previous CEO was a Zionist and was super pro killing people in Palestine, and I think that they've changed around, Ryan. So I don't roast you so hard.
But did he communicate value very well?
That's the real question.
No, and once again, I just told you that, I'm an emotional, when I think about these things, and really I just have time the past 5 years because I've used to work too much. But yeah, I think that Starbucks, since what's his name, Howie, whatever. I don't want to be a bigot myself. Cohen,
Howie.
Schultz. Sorry, but yeah, I think he's gone, and I think that the company is, and obviously, you've done well the past couple of months, so I'm stoked for you, man.
That's all that matters. The 2-month performance. That's all that matters.
I was going to say one last thing is that I think most, and I have never looked at the one that we retire on dividends mentioned. Most religious based ETFs are just a grift. I know there's a couple
mutual
Catholic
funds.
ones, and not a grift just by the asset manager. There's a few ones that are the Catholic ones.
Ave Maria Mutual
and I don't know
Fund.
why they do this. It's the S&P 500 minus Amazon.
That's what legit. That's what halal is. I'm looking at the holdings. I was like, what is the difference?
It's not. You're right.
Yeah.
But it doesn't own LMT and whatever fucking Raytheon is, right?
Because you're not allowed to invest in money lenders if you're Muslim. Money lending is not a way that you're allowed to.
It's actually changed a lot too, brother.
Yeah, but I'm not sure what else is forbidden besides collecting interest.
Crypto 2 years ago has become halal, not haram. 2 years ago.
I might become Muslim now. Can we get MPW in there too? You might have a converter. All right, everybody.
Collection or just banking? We're getting too deep into the weeds here because I was thinking every company in here has interest income.
Oh yeah, because they all probably keep their cash in treasuries. Yeah.
Yeah, they're lending money out or other instruments because it's not just treasuries. Yeah.
All right, everybody.
MPW is the most halal stock out there.
It is. It's true. Well, if you had retire on dividends coming out of the Cash Flow Kings on a High Tide Roundtable Part 2, Andrew Money Marshall coming on with a new slick haircut. And by the way, Fiscal, what would it take for you to get a haircut like Andrew's? The random thought that popped up in my head the other day. What would it take?
$10,000 and I'd do it.
10?
Is this that bad of a haircut? My God, I'm going to shave it tomorrow.
Fiscal, don't you already live in the desert?
It's fine for you, but I don't think it's me.
Oh, I want to see what it would look like.
Fly, bro. It's better than the old comb over.
I live in the desert too.
It's not really. It's not.
Shouldn't
really,
you be inclined to have short hair, living in the hot?
It doesn't really affect anything, and I'll be honest.
the lady friends like the long hair, so it would affect my bedroom life a little bit if I were to show up looking like everybody else. So
no, but have you tried a clean, good cut and tested like you should have a poll for the lady friends?
Yeah,
you try talking to women without alcohol and using your brain.
Who would do that?
I can't use something I don't have. I'm sorry.
So yeah, no, I haven't. I haven't tested the theory. It's just that I will say that I think I'm a little bit more likely to hit grand slams with the niche of people whose type this is versus trying to appeal to a broader market but being overly generic. Okay. No shade thrown at the hair.
He's staying within his circle of competence.
Yeah,
and that's why
that's wise. That's wise right here. Everybody should do that.
Andrew, is your kid? When's your kid expected to be delivered?
November. Yeah, due date's November 9.
Congratulations.
Congratulations. He's gonna come out of the Cash Flow Kings that day with the baby. I heard it's booked here already. There's no hospital. There's Cash Flow Kings.
Future super.
No, we already, she's gonna come out and be like, "Hi, here she is." She's gonna tell you what's talked about.
Yeah, members only. Yeah,
and she's gonna go.
All right.
No. Is it a daughter, Andrew?
Daughter. Yeah.
Awesome, brother. I have 2.
Oh, that's awesome. No, I'm super excited. It's our first.
Congrats, man.
Yeah. Congratulations.
Wholesome Cash Flow Kings moment at the end. Unexpected turn when Retire on Dividends comes on. Well, thank you all for coming on. Blake, would you like to start off? Where can the people find you? Obviously, you have your Twitter, Bring Great Returns. If you want to have Jay Shelley, whatever.
Yeah, you can find me on Seeking Alpha. You can find me on YouTube. You can find me on YouTube in podcast format called Brewing Great Returns. And hopefully you can find me back here in about 3 months when the Q4 earnings call comes out and we get to take a look at the new numbers.
I'm excited for that.
Yeah, and if you guys want to have me on to talk about TA at some point between now and then, I would be happy to talk to you about
that. That could be a whole episode almost, I think.
Yeah.
Fabio, where can the people find you? I know there's a few roaming channels of you that calling you a scammer and fake guru. Are those real channels?
Mike. You can find me on YouTube, and you can find me in Ryan's Discord and Fiscal's Discord.
That's true.
On Twitter.
He's a staple in there.
Yeah.
Andrew, where can the people find you?
Wherever you find Fabio.
In California?
I'm in California right now, but no, outside of that, I mean, I'm on Capital Mindset. So if you go there, you'll see me, and then I'm in both your guys' Discords.
He pops in and throws the Donald Glover meme whenever Retire on Dividends. Moment. I love it. He's done it like 4 times. It's his signature thing.
Yeah.
And we tire on dividends. Where can the people find you?
Well, gentlemen, you can find me as a Cash Flow King exclusive member, as well as
keep selling it, keep pumping it.
Yeah, that's $2 a month you could ever have, as well as in some random Discords ranting about the state of the world. And you can find me in the Gaza Strip in Deir Bala, Palestine, from middle of November till middle of February. So pray for peace.
Live docs. There you go. Thank you all for watching. It has been, I think this is actually probably the longest show. Episode 32 was, I think, the longest. This is probably it's up there.
This is close second.
Thank you all for watching. Smash the like button, subscribe. Check out all of our guests on the panel today. And, of course, Duty Event Stocks Not Drugs and Cash Flow is king.
Oh, yeah.